All right, ladies and gentlemen, how is everyone? Apologize for not being late because it is 2 p.m., even though I forgot to send Maddie the link. So
Steve's hiding the link, folks.
before we get into it, please take a moment, pause the video, and read the disclaimer. Matt and I are not professional investors. We are not financial advisors. We are just two guys that do a lot of research, like hanging out with everybody. Please take everything we say with a grain of salt. Please do your own due diligence. Please make sure you read the disclaimer. Without further ado, it's Matt Money and Steve. And I think we're going to brand this the Quarter Zip Crew.
Quarter Zip Gang.
Quarter
Whatever
Zip
you
Gang.
whatever you want to call it, Steve. As long as we get to do it with you, that's all that matters, man.
I mean, the funny thing is we didn't plan this and we're both wearing quarter zips.
I mean, I was like, I got to show up for my guy, Steven. I got to look good.
Quarter Zip Crew. I like your quarter zip, little Ralph Lauren there.
I try to keep it up. Try to keep it 100 with you, Steven.
I like it, Matt. I like it. I like the way the camera's angled. The microphone doesn't look like a punching bag. It's hilarious.
What's funny about it, Steven?
I mean, it's hilarious that I actually thought it was a legit punching bag.
I could understand where you're coming from. It was out of control.
Out of control. So, how are you this fine Saturday afternoon, Matt?
There we go. We got it working. I don't know. I'm doing great, man. Yeah, I'm just trying to get my. I don't know why this is being weird in the background. I think Google changed some stuff. I'm trying to get everything so that I can only have the and get the clowns out of the chat. I don't know if you. I don't think you do subscriber only mode, but I like to do subscriber only mode so that I don't get some trolls coming in here and doing God knows what. But things are good, man. Things are real good. I can't complain. It's a great Saturday. Happy to be here. Oh, I did not want to do that.
Did you drink your coffee today, Matt?
I didn't drink any coffee today. No coffee. I have a sausage.
I don't know how you're getting through the day without coffee. I have to have coffee.
You did it for some time, Steven.
8 months. 8 months. And let me tell you, don't stop, because when you stop, I went through the craziest withdrawal, and then one sip 8 months later, I'm like, oh, it's a nice hot day. I think I'm going to treat myself and go get an iced coffee from Starbucks. And guess what? Within a week, I was back on every day.
Every day, Steven. I mean, did you have a lot of headaches? Is that what it was?
No, I was so addicted to coffee that I was like, nothing should have this much control over my life, so I should just stop. And I gotta tell you, no. No.
I mean, that's what happens when you try to be like Steven.
So I have a very important question for you.
Yeah, man.
SpaceX is confirming their IPO plans for 2026, and they're talking about an $800 billion valuation. A, how does Matt feel about this? And B, what are the implications for Rocket Money? Because I know a lot of people in the chat are very interested in your perspective on how this can potentially benefit them.
Yeah, I found it. Okay, good. Sorry, turning on subscriber only mode and make sure there's no ads. I accidentally clicked ad. So going into specifically SpaceX. So for anybody that's been following, they noted that they're going to potentially go public in 2026 at a $1.5 trillion valuation. They just sold shares internally, so they, you can do like an internal stock share for people that are private investors in the company, etc. So they do them semi-annually. Some of those shares were exchanging hands at like $350 or so per share, which equates to about a $800 billion market valuation. And so, and an interesting thing, I saw a rumor, I don't know how true this is, but let's just get it out on the table. Apparently, SpaceX was repurchasing shares from other shareholders for $2.5 billion. So I don't know if that's Elon specifically purchasing shares or other people trying to buy out other people's shares, but apparently there was over $2.5 billion of shares repurchased from current insiders for about $800 billion market cap. It's hard for me to say in terms of the valuation if it's a prudent investment or not. I haven't seen the financials for quite some time. Obviously, they've been ramping up Starlink like crazy. I know a lot of people, my some people in my family included, that live in rural Pennsylvania, where it's a little bit more difficult to get like direct broadband and Wi-Fi, etc. They even were resorting to Starlink because what we had before was very spotty service. You'd lose connectivity for a couple hours once or twice a week, and that's just not reliable, especially if you're trying to do business these days, right? It's not 1550 anymore. So anyway, in terms of that service, it seems like it's really ramping up. People really enjoy the service, and the thing that I don't know is what their revenues kind of look like in terms of how this pertains to Rocket Money, or as I later call it, Rocket Lab. I think that the space components business for Rocket Lab will continue to do well. There's a lot of different ways that I could take this answer, but sorry, I'm just getting my my sleeves all buttoned up here to try to look fancy for you, Steven. The Rocket Lab is, in my opinion, the second best in terms of launch cadence in the United States and as well as the world. I think at this point, I think they surpassed the Chinese, who was for a while the second most launched vehicles in the world. And so, to me, I think that they're a fast grower. They're a fast follower of what SpaceX is doing. They have a lot of different components to their business, which I think, because it's called Rocket Lab, people assume that the entire company is based off of launch. But over 70% of the volume and revenue that comes from Rocket Lab actually is from their space components business, whether they sell reaction wheels, solar panels, and from a recent interview, Sir Peter Beck stated that he now believes that they're the largest space grade solar manufacturer in the world. And I posted on my X. It's a great interview with Motley Fool. I don't necessarily believe a lot what Motley Fool is all about. They're more hype, but I like the interview, and they did ask some good questions, and Sir Peter Beck showed up really well in there. So I don't know. I think it's beneficial. I mean, Rocket Lab currently trades at like a $30 billion market cap valuation. I believe that it'll be $150 to $200 billion market cap if things go well. And so my initial thought was always on a base case before I knew that there was also going to be a constellation piece, which they haven't really talked about much for Rocket Lab, but they will be building a constellation comparable to Starlink, not necessarily internet based, but there is some sort of work, whether it's data centers, who knows specifically what exactly the satellite will be potentially a foundation for, but there is going to be a constellation piece, and that is where it's going to be a lot of fun because gross margins will increase substantially. They've stated this before. Adam Spice and Sir Peter Beck have been like, SpaceX knows what they're doing. We really like that model that they use with respect to utilizing their big rocket and getting things into space that you can then have reoccurring revenue. So they really see that as the foundational model to potentially have a very end-to-end sort of space company. So in terms of Rocket Money or Rocket Lab, I prefer to call it, I think it's good. It's beneficial. I don't think it's going to immediately jump into like a $400 billion market cap valuation or anything like that.
Oh, Maddie, I think you're spot on. And the thing is, I know nothing about the company, but when I see SpaceX go at an 800 billion valuation, potentially. Now, granted, they have Starlink, but I did go through the deck for Rocket Lab, and I saw the constellation. It seems like there is a lot of things for potential. So you called it from the beginning, and I hope everybody does very well with it. Thank you very much, Pamela. Really appreciate it. Appreciate everybody being here. Please go follow Matt. He makes amazing content, calls a lot of things right. And what do we got right there? Is that why you're not drinking coffee? Is that a little Celsius right there?
It's a little Celsius. I got a little dandruff. I got to get off here, Steve.
A little Celsius?
Yeah, this is a Fizz free pink lemonade.
You and Tevis getting on the Celsius train.
I had to say, sorry, I was just looking at my background. I have another thing I have to admit to you, Steven.
Oh boy, what do you have to admit to?
I bought another box of Pokemon cards.
There's nothing wrong with that. Did you not see that on CNBC we reached 100 billion market cap on the collectible market according to Morgan Stanley?
It's insane. I've actually been doing a lot of research because like I'm looking for alternative assets. You know, I've been looking at potentially buying a nice used car, classic car that appreciates. I'm like into this. Like I see my dad was a very big collector, so he collected guns and he collected cars, and he made decent money doing that. He didn't flip them or anything like that, but you know, obviously they held their value, and so I've been kind of looking at it because it's fun, right? They're like it takes investing to a different level. Like it's actually tangible. You can put it in your hands. It's more mobile. I don't know. I just think it's fun, and you know how badass is it to show up in a nice classic car. I don't know. I don't know. So I've just been looking at the classic collectible sort of thing. I've been looking at potentially picking up artwork. I don't know. It's a whole new avenue. Maybe I'm just getting ahead of myself. Maybe I should just keep buying damn stock, but it's fun. I like going on the internet and scraping data to look at, you know, where can I get the cheapest and picking it up.
I'm with you on the classic cars. Unfortunately, I have nowhere to drive them, so I do not own any. And if I move, let's just say that a potential investment may be had. And I think you know what it is because I sent it to you.
I'm ready for it, Steven.
So, but yeah, the alternative investment market's very interesting. But let's keep it stocks for now, and then we'll.
Yeah, sorry, I'm just excited to be here with you.
Oh no, I'm excited to be here with you, and we'll talk about alternative assets at the end. And so we got a lot of news this week. We had the Fed, we had Broadcom, we had Oracle, we had a sell-off, we have a Santa Claus rally potentially being threatened. What's your take on what happened this week?
I think it's short-term scary to sell advertising on the news, and in reality, things are going to be just the way they are, and it's perfectly fine.
Well, I am gearing up to write a very damaging post to the Bears on X. I'm getting myself ready. I'm in that type of mood, and I'm a little annoyed that everybody's got a trigger finger at the moment.
Are they trying to say like we should all sell? Like, what's the deal?
Oracle gave them what they wanted. They needed one little piece of kindling. That's all they needed, and Oracle gave it to them with their debt load and their non-existent free cash flow. And now they're trying to turn this into a situation. Even Nardeni, who, very smart guy, even he went on CNBC and was talking about how we need to see if these companies can actually grow into more cash flow. It's like, have you read a freaking cash flow statement from any of the big four? No. Take Oracle out of it. The big four, there's a direct correlation of CapEx investment to cash from operations output from Microsoft, Alphabet, Amazon, and Meta. When you look at what Apple has done with basically non-existent CapEx allocation, like it's already there. We already see it's a proven track record of blowing up cash from operations into free cash flow. And because Oracle is now at a position where I'm trying so hard not to laugh that you're putting cologne on right now. Why are you putting cologne on?
Because after this stream, I have to go get lunch, and then
who are you going to lunch with?
No. I'm not going with anybody. I just like to sometimes look put together, Steve.
We're getting a little barbecue.
That wouldn't be a bad idea. Maybe some barbecue chicken.
Or you go for a nice ribeye.
Steven, I don't know about all that.
I'd go for a porterhouse right now.
I would too. I was thinking about that nice porterhouse and a nice old fashioned. But I think that the thing is that people are using this extreme. And I've always been on the case of there will be a company like Oracle that kind of comes out and has this CapEx problem, right? I remember you and I talking about this on a stream not too long ago. but I always thought that that was kind of like the bookend, right? I mean, I knew that this was going to be coming and people were going to get super fearful, but I would say that Oracle is the bookend where we've been able to see for now the rest of the Magnificent Seven really persevere through this capex cycle and still be able to generate. I mean, even I think it was you and me. I was raising the concern of going negative free cash flow. I think it was for Google or somebody like that. And within this next cycle, their revenue and net income and cash flow from operations grew so much that once again they were cash flow positive going in the trailing 12 months. So, I think it is something to be cautious of, that none of these companies are invulnerable. That they do have the opportunity, if they get ahead of themselves, to put themselves in a wild position. But even still, it's okay. I'm a big proponent of people going into debt if they see the long-term vision and they believe in the return on investment, and they aren't doing it. They aren't doing it, I guess, whimsically. Exxon is a prime example of this, and I know we're going to talk about energy later.
Yep.
If you look at the cash flow from operations statement from Exxon for 2020 to like 2018 to 2020, 2022, you'd have been like, what the fuck is Amazon doing? Pardon my French, but it needs to be said. Exxon was going into massive amounts of debt. But look at them now. They're absolutely printing when it comes to Guyana and getting everything. So they found something in 2015. They said, this is our gold mine, liquid gold mine, I guess you'd rather say. They say, we're gonna put our money where our mouth is. We're gonna develop this thing. We're gonna be the runners of this. And so I think it's no different to what's going on in a lot of the tech industry right now. And so yeah. Anyway, I think it really just depends. There's going to be the people that come out and persevere through this. There's going to be people who make some bad investments. And I agree with Tom Lee the other day. I think a lot of people were like, why is Tom being so shook? And I'd be curious to get your opinions on that as well. I think Tom's being realistic. 80 to 90% of these companies that put AI in their name are going to go to zero, or get bought out for pennies on the dollar. Not to say that everything's going to zero, but for example, companies can buy other companies for pennies on the dollar in bankruptcy court and take the good parts and literally liquidate the rest. They might have a nice data center associated with their name that they could take over and use, and they might be able to purchase that for 10 cents on the dollar. Why not? I see that happen with companies all the time. Rocket Lab did that with Virgin Orbit just a couple of years ago. They bought it for 16 cents on the dollar. So anyway, I'll stop there.
So a lot to unpack there, and I want to bring up Oracle's chart and say, no shit, it was going to do this. Okay. And you don't have to worry about cursing. Let's try not to curse a lot, but this is a safe space. So everybody's used to me cursing by now. But of course, this was going to happen. I mean, let's just look at the financials and keep in mind, this is still a $545 billion company. And I am so thankful for last night that Tevis and Tanner made me go into dark mode on everything. I got to tell you, dark mode is freaking amazing. Anyway.
Dark mode, like when you turned off your lights, or I'm confused.
No, I have everything on my screen on dark mode now. It's saving my freaking eyes.
Oh yeah, I need to do that for some of my stuff too.
So here's the problem with Oracle. And this is what the bears are ratcheting onto. Okay.
Tell me, Steven.
Look at long-term debt. It just keeps going and going and going. And this is on a quarterly basis. If I turn this to annualized, it's not a good story. Because they basically went from 40 billion in 2016. They're at 99.98 billion. And if we look at the impact on buybacks, they're basically non-existent now. I think it's 611 million. Less, 506 million now. This is a company that at one point was doing 36 billion in buybacks. They're not buying back shares. They're going into huge amounts of debt. And The cash from operations is not really growing quickly for the amount of debt that they're taking on and the huge cap. Look how much capex they spent in 2 years versus the rest. It's insane. Now, I agree with you. Oracle, I'm coining as a cockroach company because cockroaches survive. And I don't see a scenario where Oracle doesn't exist in the market. I just don't. And I know that making full statements like that with no other alternative is not intellectually correct because obviously anything can happen, but it's Oracle and the chances of them going away is very slim. Now, they gave the Bears exactly what they want. A story about a company that is barely increasing cash from operations, expanding capex, negative free cash flow, with a negative net liquidity position of roughly $80 billion because they only have around $20 billion in cash and $100 billion in debt. There is not a single other hyperscaler that does not take long-term investments out of it, that does not have enough cash on hand to write a check and eliminate 100% of the long-term debt. And putting up large amounts, tens of billions, annualized in free cash flow. This is what the Bears needed to grab a hold because previously they had been saying the amount of spending is insane, et cetera, et cetera. Now they have that little hair that they can pull and say, well, look at Oracle. They're not free cash flow positive. They're just adding debt. Their cash from operations is not following the investment in CapEx. And will they really be able to monetize? Now, for the rest of the market, I don't think Oracle has anything to do with the other hyperscalers. And I think it has everything to do with NVIDIA. And for NVIDIA to fall on Oracle's earnings is an incorrect correlation when Oracle comes out and says that they have $592 billion in RPO. That is $192 billion more than Microsoft. So all roads are leading back to the semiconductor industry. All roads are leading back to NVIDIA. And Jensen has already came out and said $65 billion for Q4. We know that Trump is being a salesman for GPUs. China is going to start buying GB200s. And 2026 looks very profitable for not just NVIDIA, but Broadcom and AMD. So I think that we have a false narrative going on, and you're 100% correct. There are pockets of the market that are super expensive. There are companies that will not be here in 5 or 10 years from now. And the companies that do survive, some of them are tremendously overvalued. But the big difference is a lot of these companies have either no exposure to the S&P 500 because they're too small, or they're such a small portion that even if they get chopped in half, it wouldn't even matter. And the greatest companies in the market are trading at valuations that historically do not look expensive. My last point on this, which I really want your take on, I would argue all day long that the Spectacular Six and even the Mag Sevens, you got to put Elon in there, that the Magnificent Seven have 7 of the greatest CEOs and management teams that have ever been assembled in the history of business. These are the greatest companies that have ever been created in the free markets, in the history of mankind. And to think that all of the top CEOs and management teams are incorrect on their stance on AI when they are the companies and the teams that are going to drive the technological industry forward. Who are the bears? Who am I? Who are you to say that they're wrong? They're the ones that are going to put out the products that change our lives, not the bears and not us. So it's hard for me to see a world where we are going to say that companies which are generating 100 to 160 billion in cash from operations on an annualized basis, that have assembled balance sheets with 50 to 150 billion in cash are incorrect. And I just don't see how intellectually the bears can say that there's actually a bear case to this.
Yeah, I would agree. I mean, I think that this is just going to be more of what other companies end up doing. If they see the benefits of the cost spending, over some companies are looking at spending over $100 billion a year in capex. If that ends up being the norm, and they see the benefits, I wouldn't be surprised if you see more companies taking on more short-term cash in the forms of debt to be able to fund things like this. And I think you're right. Oracle has staying power. It's not going to zero. It is a huge foundational piece of software. They have software in every enterprise that I know of. Are they being disrupted with companies like Palantir and stuff like that? I would say not disrupted 100%, but I mean, yes, they're getting challenged. So, but I don't think that it's enough with what's going on to move companies like Oracle. Like Oracle is going to be a massively profitable company. It's embedded in so many of the S&P 500 companies as well as other Fortune companies. I don't know. I just think that Oracle, yes, is it a little bit more old school? Yes, but at the same time, they're innovating still. They're still putting up new opportunities and new parts of their business. Their Fusion Cloud does great work. It integrates well with their ERP, enterprise systems, basically their supply chain systems, etc. And you know how hard it is to move systems like that? It takes a lot. And so if Microsoft or somebody else doesn't offer those sorts of unique systems, it's difficult. And I think really the only competitor that I could see coming out of the woodwork of something like this is Palantir, in terms of being able to streamline some of these like human resource management or supply chain management sort of systems. But the problem with Palantir is they don't offer a standalone cloud platform like Oracle, and that is the problem. That it's one of the things that I've always kind of scratched my head with Palantir. It makes it very nimble because then you don't have to disrupt. But at the same time, you have an all-inclusive package with Oracle in that respect, and that I think also makes them very sticky.
Do you mind if I expand on what you said?
Yeah, please do.
So I've led a large-scale ERP implementation. Okay. Thousands of people at the organization led it. I will tell you right now, it is very intense. And when I see people discuss Palantir is going to eat Oracle, Workday, SAP's lunch, these people don't know what they're talking about, because Palantir, as you said, they do not offer, when you see Palantir ERP system, it's for manufacturing. It is not a back-end ERP system for HR and finance. And traditionally, ERP has married independent financial platforms with a human resources HRIS system into one platform, so everything is on the same platform. Now, when you go through this type of implementation, it is drastic. It takes a long time. I'm not going to get into the details, but Palantir does not play in the same ERP space, and they do not have a product for HR and finance, and it is not easy to build those platforms. And for anybody in the chat who works at a company that utilizes any of the platforms that I just rattled off, Microsoft Dynamics, or if you just want to look at pure HRIS systems, you have Paycom, you have ADP, et cetera, et cetera. Palantir does not play in that space. They just don't. And it's something that annoys me with the Palantir bulls when they make those types of statements, because it's just not true. Now, that doesn't mean that Palantir can't assemble a platform and go to war in that market and take market share. They absolutely could, but that's not the field that they're playing in currently.
I think they are. They're starting to definitely go after ERP, and people are asking, "What's ERP?" ERP is basically enterprise resource planning.
Resource planning.
So, yeah, so you're basically trying to understand dynamic modeling of what your revenues will look like if things like, for me, I stream out oil and gas forecasts, and then associate that with certain price decks, etc., that kind of understand and try to understand the ops cash and the free cash, etc. So other companies are then using comparable things. Some people use SAP, and so to be able to kind of merge with that, and then obviously try to understand what the future forecast for their companies look like. Then you have HCM, and then you have what's SCM. So HCM is like human capital management, I believe, and then SCM is supply capital management. All these different things are enterprise softwares to help you understand what's going on with your business, and so I think that, yeah, I'll just kind of leave it at that. But they all integrate extremely well with Oracle's backend cloud platform, and I think that is what's very sticky versus something like a Palantir, unfortunately, or fortunately, it depends on, right. And another piece with Oracle, they offer on-site servers and things like that, which is also very important for some assets and some businesses. Some assets like to be strictly cloud. Some businesses like to have a hybrid where they're cloud based as well as local based. So it really just depends. And so because of that, I think you'll also need Oracle for quite some time.
Yeah, and look, when I say that they're not competing in that space against these companies, I'm not talking about from revenue forecasting / manufacturing. I'm simply talking about back-end services from accounts payable, accounts receivable, payroll, human resources, learning and talent, all the back-end stuff that you have at mid to large size organizations. That's just not their forte. And from what I've seen, and Amit would know much better than I haven't seen that they are trying to build a platform to compete in that area yet. Now, maybe they do in the future.
They do a little bit with ERP. I've seen that personally, that they're trying to integrate with SAP to an extent, and I believe that if
integrate, well, let's not go further down that road. I don't want you to say anything, but
yeah,
integrate. That's not necessarily what I'm saying is I don't think they are. And I don't know if they're working on it, but it doesn't seem like they are working on a solution to put up against those platforms.
it's tough. Yeah, I won't say anything proprietary. I think it might just be up to the companies, right? Maybe they want to stick with SAP. Maybe they want to stick with Oracle because they like and already have that. And as you stated, it's difficult to move off those systems. You have to design all your dashboards and get everybody in alignment. And when you have these big billion-dollar companies, it's tough to move platforms. So
I'm so happy we made the move to the company we moved to. I would never want to go through that implementation again. Ever.
Yeah.
So yeah, basically when it comes down to what happened this week, I think the Bears got thrown a bone. I think Broadcom's quarter was great, but I think Oracle left a lot of questions, and they really provided the Bears with a lot of ammo. And unfortunately, it bled over into the rest of the market. And I just don't believe that Oracle's numbers should have anything to do with these other companies, and it should not have anything to do with NVIDIA. And at the moment, I have a large position on a relative basis to my portfolio in NVIDIA. I am considering increasing that position now because of how cheap it is trading. I am so shocked at how low the valuation is. And when I look at next year, I think NVIDIA is going to do very well. And I think it's going to be an easier way to make money than to try to figure out which of these companies can generate a 50 or 100% return. Because look, the reality is they're on a run rate to do about 210, 220 billion in revenue this year. And they're expecting to do over 300 billion next year. And we're about to hit 65 billion quarterly in Q4 with forward quarter-over-quarter growth. And at a 50% profit margin, which their margins are over 55%, which is crazy for a hardware company. But at a 50% profit margin on 300 billion, 150 billion net income, That buyback program is going to be huge, and they're going to be investing more in companies. And there's a lot they can do with that capital. And at this point, 185 was my target for this year. It surpassed it, but it is no longer surpassing it. Maybe we get past it. Now, for 2026, I do see a scenario where NVIDIA is between 250, 275. And that's my target right now for where they go, because even at that number, they're still trading at less than 30 times forward, which puts it cheaper than Apple and other companies with tremendous forward growth. And I don't think, from what I am seeing, that the CapEx cycle is slowing down. And NVIDIA
Still accelerating. Yeah.
It's still accelerating. So I think we got a pretty good runway with NVIDIA. And I just think it's, at this point, it's an easy investment for me to make. And that's what I'm looking for. I'm looking for investments that, even if I already have them in big positions in them, that are easy for me to deploy capital, don't stress me out, and know that the long-term narrative, no matter what the fluctuation in the market does, isn't going to impact it, because all the GPUs are already sold. Like, we know that Q4 numbers baked in. Like, it's not really going to change. It's only going to change to the upside.
You mean you can't change something like 2 weeks in advance, Stephen?
Well, I mean, if you already have every GPU freaking sold for cloud, it's going to be a little hard to not book that revenue if it's already sold. And now with Donnie becoming a salesman for NVIDIA and taking 25% of GB200 sales, he has a vested interest, and the U.S. government has a vested interest. And none of this is rolled in with China revenue, which could be 10 to 20 billion a year starting next year. So I like the position we're in for it. That's just my opinion.
No, I agree. And people are wondering about Broadcom. I think Broadcom is a phenomenal company, and they've been on literally a historic, legendary run. And they're, in terms of M&A, one of the best companies. But I think, and it's sorry to pivot from NVIDIA to Broadcom, but I see people chatting in the chat. It's not that the company didn't perform well. It's just that the valuation got ahead of itself, I think, in my opinion. So, I mean, it was trading north of, I think, like a 35 to 40x price to earnings.
We're switching to Broadcom?
I mean, we could keep on NVIDIA, but
no, that's fine. I want to update one number. Keep talking, and then I'll bring it up.
But anyway, I think Broadcom is a phenomenal company. I'm upset that I never really invested in it. It's one that I've kind of had in my periphery for quite some time. I'm a huge fan of Broadcom. They've spawned a great CFO, and Adam Spice, who now works for Rocket Lab. He was he got that M&A bug from them. And if anybody does M&A with phenomenal bolt-on success, it's Broadcom. So if you ever have a CFO or somebody that has learned from Broadcom and understands M&A because they worked at Broadcom, I would say trust but verify. I mean, they're most likely going to be a phenomenal at M&A, because not all M&A is good M&A, as if you're following a lot of these things now. But I agree with you, Steve. I am humbled by the statements that I've made in the past, and I'm more of I want to be cautious. I don't want to be like a Debbie Downer, but I've always kind of been keeping my eye on when is the peak for this CapEx cycle, and just from what I've seen from 2Q to 3Q, I just continue to see it accelerating. So for now, I believe everybody that's NVIDIA is doing well. I just am afraid at what point does the market poop itself? And for right now, it doesn't look like it's anywhere close to pooping itself. And I made a statement, and I'm still kind of curious if I'm going to be right or wrong. But going into the third quarter earnings, I was kind of saying that I think a lot of the easy money's been made. And I would stick with that statement for now, but I agree with you. I don't think it's time to roach out, as a famous person not a famous person, but a buddy of mine likes to say roach out, meaning like the lights come on, the roaches scatter everywhere because everything's going to zero. I don't think it's time right now to say, hey, the easy money's been made, let's get out of it. I still think that we have, a lot of life left in this rally, and I think NVIDIA is doing a phenomenal job. My fear now is more on the execution of these companies that are buying. But I don't think that is NVIDIA's problem. NVIDIA, I think, has the process down. I think NVIDIA is making the chips. I think it's more along the lines of the companies that are buying all these chips to actually get them implemented and turn them on and get the revenue from it. I think that's the issue. And I think if you have a surplus or you're not able to get the chips on as fast as possible, that's what might end up backing into NVIDIA's future revenue potential. But for right now, it seems like everybody's getting as many chips as they can reasonably afford based off their cash flow.
So I agree with you. And I want to do two things. One, Rusty, thank you very much for the super chat. And they were correct because dark mode, I feel like, is going to change my life. I put my phone on it. And as I'm clicking into things, I'm putting everything on my computer into it. So it's really great. I think I'm going to have less headaches from this. I want to share this. And Tevis got on me about how I am building this. And I think that it is now easier for everybody to see. Let me see if Matt, what looks better? Like this or putting everything on bold? Like that or like, hold on. Or like this? What's easier to read? Maddie? You're on mute?
Sorry, I like the non-bold more.
Okay. So if we look, and here's where Broadcom, phenomenal company, but let's look at valuation real quick, okay? Broadcom is a bigger company than Meta right now by $76 billion. Yet Meta does $126 billion more in revenue. It does more than $64 billion additional in EBITDA, $55 billion more operating income, $80 billion more cash from operations. It's deploying more than $62 billion more in CapEx, yet its free cash flow is still $18 billion more, and they do $35 billion more in net income. There's no world where Broadcom should be a bigger company than Meta. There just isn't. And Broadcom trading after the drawdown at 50 times EBITDA compared to Meta at 16.5 is insane. Broadcom trading at 73.5 times net income compared to Meta at 27 times is insane. And then when I look at NVIDIA's numbers and AMD's numbers, if we just want to look at the chips, this is still a scenario where NVIDIA has more growth than Broadcom. I mean, NVIDIA just put up 63% year-over-year growth in Q3, and we know that they're going to put up more than 55% in Q4. And the analysts are expecting 48% revenue growth next year. So I still think Broadcom's expensive here, and I think it should have never got to the levels that it did. And I think it was helped a lot by the TPU story. I think it was helped a lot by just the AI story in general. And I'm not saying those are bad things, but I think Broadcom and Oracle got to points where they were just too expensive, just like I think Palantir's too expensive. And I think Broadcom should come back down to reality. I don't know that Broadcom deserves to be a $1.7 trillion company when you have companies like Chevron and Exxon that are $300 to $600 billion that put up very similar amounts of free cash flow. It's an excessive valuation.
You're a good man.
I mean, what do you think when you see these numbers?
I mean, I think I stated it well. I think Broadcom just got ahead of itself.
Yeah,
I mean, like you're seeing, but the market cap is. It's not to say it's not a great company. It's a phenomenal company. Look at those margins, right? Revenue, EBITDA
Amazing.
margins are over 50%, but it doesn't mean that that you can value it comparable to Meta, and that's one of the reasons why I bought Meta. Like, if you think about it, it's not to say that Meta's dirt cheap, but I mean, comparatively, I mean, you're talking, less than 20 times price to EBITDA. It's stupid cheap comparatively to looking at the valuation of Broadcom. So I don't know. It gets you to think a little bit. These companies can perform extremely well, and it just depends when you're comparing against different companies. Not to say that if you were to buy Broadcom, you'd lose money in 10 years, but I would expect other companies to outperform comparatively to the price to earnings and the valuation that you're buying Broadcom at here today. So you're purchasing, the company based off of a reasonable valuation in what, 2028, 2029, versus something like a Meta you're purchasing that's like at a dirt cheap valuation today. So anyway.
So the problem that I have, like, I wish companies did not report on biannual years or freaking different years, and they just report on freaking calendar years, because it throws this type of analysis off, because Broadcom just finished their fiscal year, because their fiscal year ends in October. So this is a little bit not fair, but I'm going to put it in anyway. Let's see how it changes. I got to rethink this, but Broadcom is not expensive on a forward basis when you think about the next 3 years out. But if I did that, I would have to put Meta, because there's only 1 quarter left for Meta. I'd have to skip 2025 because I'm giving Broadcom an extra 9 months of generating EPS. So basically on this timeline, Meta would go 3012, 3321, 3551. I mean, Meta's still cheaper, but they're both very cheap on a forward basis from an EPS perspective. But EPS is also can be manipulated a little bit by certain things, such as income taxes, credits, everything else. Cash from operations and free cash flow, very much harder to manipulate. And it's more simplistic picture of profitability. But to me, NVIDIA and Meta are the 2 easiest big 7 companies to invest in. That's just my own personal feeling. I mean, I look at this, NVIDIA trading at 17 and a half times. I'm sorry. I have it at 250. I mean, look at this, man. At 175, where it is, trading at 18.4 times 2027 earnings. If you put NVIDIA at 275, it's still under 30 times forward. And that's why I'm saying that. It's like, to me, it's a no-brainer that NVIDIA just gets bigger and continues to do well. So I'm team NVIDIA right here. Not saying that Broadcom is a bad company. I just think the valuation doesn't make as much sense when you look at the other metrics in addition to forward earnings.
No, I mean, look at it. I mean, Broadcom's still going to do well, right? I mean, it's,
Yep.
I think you showed it's going to go 60, 70% earnings growth in the next 2 years. So apologies, I was distracted. I got an Airbnb message. Funny story for you, Steven. They're like, they didn't know how to close the hot tub cover, so they left it uncovered all night, right? So of course it's 40 degrees. And then they just messaged us. We finally figured out, we called them on the phone, got them to figure out how to close the hot tub cover. So it's only been covered for about an hour or 2. They then want to get back in the hot tub and they say it's not really warm. It's like, well, it was uncovered for an entire night. Like, what do you expect? It's 45 degrees out. Of course it's not warm. Anyway, people these days.
You want to get into some oil and gas talk?
Whatever you want, Steven. I'm up for whatever you need. Hopefully there's no ads on my stream. If you see an ad on mine, other like midstream ads, of course, please let me know. But I've always tried to organize it so I don't have any midstream ads. Only if you're going back and forth between streams, right? So please let me know. One's in the chat if you haven't had any midstream ads for my side. I accidentally did the one very early on in the stream, but if you haven't seen any since like 2 minutes into the stream, then please let me know.
Let's get into Chevron, Exxon. I mean, look, we don't have to talk about it, but you know what company has been asked about. It's in the chat all the time. If you want to talk about it, we can. It's 100% up to you. Where do you want to talk with oil and gas?
We can do anything, man. I mean, I could talk VG. I just can't talk about the ongoing litigation.
Floor is yours, sir.
What do people want to know?
Let's start with your take on it.
What, Venture Global?
Yeah.
Well, first and foremost, let me introduce the discussion between Next and VG. So I'm just overall for the landscape for the next 10 years. This has always been a 10-year investment for me. I'm bullish on liquefied natural gas, and I think that there's only really 3 big players at the moment that are going to be supplying the majority of it. So to get everyone kind of in the room, there's about 300 MTPA metric tons per annum of LNG sold on an annual basis, which if you do some math, it's about 14 TCF of gas sold worldwide. And it's majority at the moment from 3 countries: Australia, which produces about 80 MTPA, Qatar, which produces about 100 MTPA, United States is about 110. And that leaves a little bit, here and there, some like 10 MTPA here and there from other countries going to different places. The way I look at this is it's been growing at a rapid rate. The United States is now the largest LNG exporter worldwide, surpassing Australia, which was the leader for a long time. Then Qatar took over, and now the United States is kind of overtaking Qatar. So setting that landscape of, okay, here we are. And I believe that between now and 2035, you're going to double that capacity to about 600 MTPA, of which the United States will be about 40 to 50% of that entire capacity. So you start to think and go back, you're like, okay, well, where is this phenomenal company? It was kind of the leader in terms of US LNG exports. Maybe to go a little bit step back, before 2008, when the shale revolution really started, everybody thought that we were going to be importing gas because we weren't really able to understand and develop as much gas. We also weren't getting as much oil out as well. We were importing more of our oil from the Middle East. And so everyone thought we were going to be an importing nation. Well, now because of the shale revolution, drilling sideways, fracking, with multiple stages in horizontals, drilling horizontals up to 3 miles long, etc., the innovations that have taken place over the last 15 years, we are now an energy exporting nation with respect to LNG. We do still import, and because you have to do trading. Some oils are better for other countries. We can import from Canada because they have heavier crudes, etc. That's maybe getting too far into the details. Maybe when we get into pipelines, we talk more about that. But the way I look at it is LNG is going to be the United States' greatest asset and export going into the 2030s. And as a person that looks in investments that are 10 years out, who can you then latch onto? Well, Cheniere's already in establishment, and they will grow. They are doing expansion projects at their Corpus Christi facility. They're also doing expansion projects at the Sabine Pass facility, which is huge and beautiful if you drive by it at night. But that's already established, right? So then you have other companies out there, which obviously Venture Global, Next Decade, those are companies that are rather in their infancy. And so, going into that debate about VG or Next Decade, Venture Global has just started their 2nd facility. Within the next 18 months, they'll start their 3rd facility and their largest facility. Next is in development, FID'd, so there's no risk of that piece, right? Of course, there's risk still associated with it, but the FID piece is not at risk, and it's actually in construction. So in that respect, they're still pre-revenue. So to anybody that always asks that question, you're talking about a company that is making a lot of money, Venture Global, and going to continue to grow and build more facilities versus Next Decade, which is still pre-revenue and hasn't started facility operations yet. So there's different risks associated with each investment, and I can't answer that for you. There's also the thought of you're talking about a company that's in development, $16-17 billion market cap in Venture Global versus a company that's less than a $2 billion market cap in Next Decade. And it really all just depends on where you think the end terminal value of each of those opportunities will be and how much risk you're willing to take on. I view Venture Global as less risk associated with it because it's already producing, and they have a unique modular design that they've executed now twice at the moment, and they're currently very far along on their third facility as well, versus next decade yet to actually get anything turned on. So you're in a different part of the business's life cycle between the two different companies. I can't answer that for you. I can't answer what risks for a dollar of investment you're willing to take on. What I will say is that because Venture Global has gotten so cheap, if you're trying to avoid risk or lower your risk tolerance, I would say Venture Global is probably a better bet. But I think overall, if you're looking for overall return, which has more risk, I would say next decade has a potential for overall better return at this current moment. But that, once again, is up to your risk tolerance, right? I could see easily a place where next decade goes up 10x from here to a $20 to $25 billion market cap. But then at the same time, they might have to dilute shareholders because of the fact that they're going to have to bring on additional facilities, et cetera. And we don't know how much actual interest rates and revenue they're going to actually generate once the facility turns online, versus Venture Global is already producing that revenue. It's already exporting that gas. It's already getting the cash flow. So you're de-risked from that position. So people have asked me a million times, and I've repeated this, and I hopefully this hits home for people. I can't answer the question for you. It's really up to an individual's portfolio. And it's the same thing with any investment, right? I can't answer whether or not a company is good for your portfolio or not. It always just goes back to you understanding, where your line in the sand is and how you feel. But that's how I'll open the conversation. And
I have questions.
Dive off from that. Yeah, go for it.
All right. So I'm going to ask you very remedial questions.
Go to zero.
I am a numbers person. Okay.
Yeah.
I am looking at this and I am seeing a company that is super intriguing from an aspect of the revenue has gone up 170% year over year in Q3. The income from operations has gone up 194%. They are now net income positive. Consolidated adjusted EBITDA is up 200% in a year. Now, phenomenal. What I have a question about is guidance has come down just a little bit for this year. Is guidance for the next several years coming down also? That's question one. Question two, do you have any feelings about the amount of debt that they have on the balance sheet compared to the adjusted EBITDA that they are going to be generating? Because to me, this is kind of a normal range when you look at where midstream operators have their balance sheets. For some investors, this may seem like a crazy multiple on debt to EBITDA, but for midstream, this is actually quite normal.
Mm-hmm. Yeah, no, I'm glad you brought that up. So if somebody, I think a lot of people will look at this and be like, oh, there's debt. No bueno, right? But I think you hit it up nail on the head. It's not exactly like a midstream company, but in terms of how it operates and the business aspect of it, in terms of piling on debt and et cetera, you're right. It's comparable in that respect. But I think if you looked at this 18 months ago, you'd have been like, oh my God, the debt to EBITDA, why would I ever invest in a company like this? Then they brought on Plaquemines and the debt to EBITDA went from 20 to like 6, right? And now that Plaquemines is fully ramped up, I forget what the debt to EBITDA is now. The magnitude will be right, what I say, but it's probably wrong. The debt to EBITDA is probably down closer to like 5 now. But you have to think that they're investing in a third facility that is going to be their biggest facility. The third facility that they're bringing on, which they just got $15 billion worth of sanctioning for and debt for, is going to be comparable to their first 2 facilities combined. And so they're literally going to bring on this next facility in double capacity for what their EBITDA will be potentially generating. To get back to your answer about specifically EBITDA guidance going down, that is something that needs to be noted, right? The thing that needs to be noted here is with some of these EBITDA projections, some of these had spot pricing in them, meaning that when what they have is, generally speaking, these facilities, in order to get financing from banks and private lenders, they need to make sure you're going to be able to make money. And so they'll have what they have, liquefaction costs and fees associated with it, coupled with like 15% on the Henry Hub price to pay for like fuel gas and normal underlying operations and power generation, etc. So these facilities are all sanctioned at the moment based off of those sorts of contracts. Now, if they weren't going to be able to be profitable, the banks would never have given them the money in the first place. Unless, unfortunately, they go massively overrun, which Venture Global has been able to keep pretty much in line. Of course, there's always some drift associated with inflation. Turbine generation is big right now. People are spending out the wazoo. So, of course, there's inflation associated with just normal turbine ordering and stuff of the like. But they haven't blown the budgets by like 50% or 100% or anything like that. It's been like 10% here or there, which is generally speaking pretty normal. It actually pretty what am I trying to say? Normal LNG projects I see you go over by like 50% easily.
So Matt, can you address this for me?
Well, let me finish the one piece. So the reason why I think people are getting a little bit scared is the spread between the European gas market prices and the U.S. spot market prices. U.S. market prices have gone up from $3 or so to $4.50, even spiked up around $5 recently, which is good news for me and our onshore businesses in the U.S. But then you have the meaning everybody's like Exxon, Chevrons, etc. Because obviously you're getting more cash for the same amount of gas that you're producing. But in when it comes to spot pricing, that means you're buying it at $5 and still trying to sell it to the Europeans at $9.50. So that margin is getting squeezed. Whereas before, let's just take during the Ukraine war, for example, you were able to buy it at $2.50, $3, put it through your facility and sell it in 2022 for like $25. So that margin was much bigger back then. So there's people that are sitting here being like, okay, well, at what point does it not even make sense to sell gas at spot prices through these facilities if there's no contract in place? Now, of course, a lot of these facilities already have contracts in place, so they have to take the gas. Like these contracts are generally set up like, we're buying it from you, we're going to sell it to this person, we're going to make this much money per transaction. Generally speaking, those are kind of locked in. So anyway, that hopefully gives people a little bit more insight as to like where the line lies.
So I think part of the problem is a lot of people follow analysts, and I know some people don't want to follow analysts, but the reality is that the analyst community is seeing huge EPS growth this year and tremendous negative growth the next 2 years. And then on revenue, huge growth this year and then single digit for the next 2 years. So first I'm going to ask you, does the revenue growth look, in your opinion, is this because new trains aren't coming on until 28? So it's just going to be current capacity plus whatever else they can squeak out? Question A. Question B is, do you think that these estimates are incorrect? And do you think their EPS is going to grow in the next 2 years?
I think for right now, Calcasieu Pass 2 project, which is the project I was talking about, will be starting up. And my thought, and I think they stated 2027. I think it'll actually start up in 3Q, 4Q, 2026. They're actually pretty close to getting, if they haven't already. I was waiting for them to say it. In the 2Q, they said it, and I think that I've been talking about it on X, so they might be like following. I'm not saying they're following me verbatim, but basically the trains that they're building in Italy, these are all modular trains that they build in Italy and ship over. They've already started to finish them, and are ready to ship. Whether or not they're actually on site, because obviously it takes a couple weeks for it to come from Italy to the US. Whether they're actually on site or not for that is I don't know. But anyway, what you are seeing is at the moment, I would expect 4Q to be higher. I don't know if what you were showing was quarterly, if it was annually.
Annualized.
Yeah, so part of what's happening with this, and it goes back to understanding whether or not it's spot pricing or whether it's contract pricing. In the first quarter, everything was, I don't want to say spot pricing, but the majority of everything was spot pricing in the first quarter, but Plaquemines wasn't fully ramped up in terms of so 10M. Still hear me? Yeah.
It's going in and out, Matt.
Damn it. Yeah, this for some of this USB link is like loose. Sorry. But the Kalkashi project, let me just double check I'm recording from the right mic. Yeah. This Kalkashi project went on what they call commercially online. So basically before this, they had a bunch of contracts that started once it gets to COD, commercial online. And once that happened, they're no longer selling at spot prices. So they're selling to people that have contracts set up. I'd run through the list of people, but if anybody's curious, you could look up the third parties. So that decreased revenue because before then they were selling at spot pricing to the highest bidder, right? Whoever wanted to buy it for whatever price. And so they were maybe making $4 or $5 an MCF. Now it's down to $2.50 or so, plus 15% of Henry Hub. So that Kalkashi project is now on commercial, agreements, right? So that's kind of filled and revenues that way. In the latter half of 2026, I think something comparable is going to happen with the Plaquemines facility. So Plaquemines started up in December 2024, so about 18 months of commissioning, etc. Eventually, they'll start up the facility. Well, they have started up the facility. They're almost at peak capacity. I think that they're still trying to commission the power situation there. So they're on temporary power, which is allowing them to produce, but they're not on like the long-term power solution that they've been building. So once that's finalized, I think they'll be able to hit commercially online and then sell to the counterparties that are purchasing the gas. That means that they can no longer sell at spot pricing. So that would probably mean revenue goes down again. However, in the third or fourth quarter of next year, they're going to bring on the third facility, to which they need to commission, get everything online. As the thing that's unique about Venture Global's modular design is that they're much smaller trains, meaning that they're only like at most one MTPA. They're actually closer to like 3/4 of one MTPA per train pair. And they have like upwards of, I'm trying to remember how many trains, but on the third facility, it is, I think, upwards of like 36 trains. Let me just double check. It is 36 trains on the first phase, and then an additional 18 trains. This entire project is going to be like 54 total trains.
And when is it going to be finished, Matt, the project?
The first phase would probably start to get ramped up in the third quarter of next year, and I think it'll be finished being fully ramped up by the end of 2027. And then the second phase, I think, will probably start to come on in the middle of 2027 and be ramped up throughout 2027 and probably finish commissioning at the end of 2028.
End of 2020.
I mean, maybe I could share this. So this is what I kind of like always keep track of. I mean, these are all the different projects that they kind of have going. Let me see if I can hide some of this stuff. That's not.
Is this from their website?
It's my generation of what they've stated.
Gotcha.
So, and you go through their investor presentation, you'll see them talk about mostly these three projects. So this is Kalkashi. This is currently operating. Same with Plaquemines, currently operating. So of that, they're generating about 40 MTPA of export capacity. the nameplate of these facilities is only 30. So the fact that they're getting closer to 40 is pretty impressive, because that means they're producing about 33% more than the nameplate capacity. So if you kind of use that throughout, you can see that these are all the listed projects that they've talked about. The only one that's at pause at the moment is this Delta project, and I think it's because they have this Plaquemines expansion, so they'd rather get this Plaquemines expansion. But anyway, you're going to see, for what they have installed at the moment, it's about 40.4 MTPA. They're going to bring on this first phase of their third facility. That'll pretty much increase by like 65% their current capacity. And then if they bring on the second phase of the third project, it'll double the capacity of what they're already kind of putting out. And that, I have the commissioning times and when they're actually going to get these up and running. But yeah, that's kind of the timeline that you're kind of looking at. So what you're seeing here is Plaquemines. I think you're going to start to see them in the end of 2026, maybe start to commercially online part of the facilities. But it's going to be fully commercially online, I would say, by kind of like mid 2027 timeframe. So that might be the reason why you're seeing revenues kind of grow and then drop, grow, then drop. But it's all dependent upon spot pricing.
Interesting. I mean, this is definitely something that I'm interested in, because from the very beginning, even when the energy transition was kicking up in 2019, 2020, with all the talk about solar and eradicating natural gas and oil, and then Biden talking about 10 years left for oil at the State of the Union, I'm on record and on Seeking Alpha saying it's not happening. Oil and gas is going to be here well past 2040. And LNG, we're the largest producer of oil and gas in the globe. And
Yep.
There is a need for liquefied natural gas globally, especially in places like Japan. So, Matt, Venture Global, they do the liquefaction in addition to the exporting?
They do liquefaction, so that they don't own any upstream assets, meaning like the actual production that comes out directly
Right.
out of the ground, but they buy it from the pipelines. So where Venture Global starts is buying from the pipelines, which is where you come in, because I know you're a big pipeline guy.
Yep.
And then majority of what they have are these contracts that are called FOB. So they're free on board. So once Venture Global buys the gas, liquefies it, and puts it on the boat, it's done. They've made all their money. But Venture Global also owns 7 or 8 boats, or will own 7 or 8 boats, a majority of which I think are already delivered at this point, to which they can deliver to whomever. So I think they just signed a contract. You'll see on the phase 2 project here. Let me go back. They just signed this, which was a 2 MTPA contract to Ukraine, which is deliver X ship. So actually, it's Venture Global's responsibility to not only buy the gas, liquefy it, but also deliver it to the Ukraine. So there's that piece. And there's margins associated with that as well, because if you own the boat, you can make a little bit of margin on that as well. But that's part of it, and part of it as well is they're only selling. This is another piece that may or may not be important, depending on if you really want to get into the details. But with Venture Global, they can only sell up to the nameplate capacity, and so you'll see that they have 10 MTPA of the Calcasieu project for the first 3 years fully contracted. So they have they're exporting around 12 MTPA. So they have 2 MTPA or so that they can sell themselves to the highest bidder, whether that's Europe, Japan, whomever, and they have the boats to be able to do that. And so that's an important piece. And then same thing with the Plaquemines project. They're contracted up to 20 MTPA, but they are actually, like, this is not just forecast, this is actuals for both of these. This is like actuals. They're exporting at about 28 MTPA, a little over 2 MTPA per month overall. And so that is above what they're kind of commercially obligated to do. So that means they have an ability to to export an additional, what is that, 385 BCF of gas to other countries annually on their own. So they can find the highest bidder, ship it, etc. So very, very interesting piece, because not every company has that capacity to do that. They might not have the boats or the financial withstanding. And that's another piece as well, is like, now that this might be more beneficial for the longer term, or like Calcasieu Pass phase 2, and then some of these Plaquemines expansion, etc. Before, when you didn't have the EBITDA growth and the EBITDA that they had, they would have to go to the banks to get financing. Well, now that they're producing so much EBITDA that you showed, like $1.5 billion a quarter at the moment, they can finance their own stuff, right? Like, why go to the banks if you can finance it on your own? So there's that piece as well, which I think gives them flexibility, and they're likely going to get re-rated in terms of their debt, because before they weren't producing any EBITDA. Now that they're producing decent amount of EBITDA, as you stated, their debt to EBITDA has come down substantially, and they're pre-investing for the long term. Like, this Plaquemines expansion is going to be big. The Calcasieu Pass 2 project is going to be very big. So they're investing in these things before they even come online. Once they come online, it's all cash at that point. And then they could start investing for the Calcasieu 3 project, which is huge as well. Look at that, 30 MTPA, likely to be 42 with the actual capacity that they actually do. And then they had a fifth site as well, but I think they put that on pause to be able to focus on the Plaquemines expansion.
Well, great explanation. I mean, look, I'm getting very interested in it. I still have to do more due diligence, but this is probably the most requested thing that I see in the chat. So happy that you were able to discuss it with me. Mamba Mentality, thank you so much. Really appreciate it. I'm a big SLB fan. I don't know what it's going to do. It's got great financials, great cash flow statement, huge buybacks, good dividend, and they're at the heart of all the wells. And if my thesis plays out, we're going to need more energy, and they should continue to do well. It's a hated industry, but I think that it'll turn the corner if energy catches a bid.
What I will say, the last piece, and you don't need to bring it back up or anything like that, but what I will say is, at the moment, Qatar exports about 100 MTPA. And so with the numbers that you just saw on the screen there, Venture Global is on par to be able to exceed what Qatar, as an entire nation with some of the largest gas reserves in the world, is going to be able to export by themselves as a single corporation. And so when you think about the growth prospects of the United States LNG, which is going to be the largest export from the United States, to me, why wouldn't you be bullish on something like that? I could understand where people might be like, well, it IPO'd at $20 billion, a $45 billion market cap. I agree. There's a reason why, when Kris and I initially were kind of talking about it, they were trying to IPO at a $110 billion market cap valuation. We said, no, I'm not going to get involved. It's just too much. To me, I think that's what the long-term valuation could be. I think that it could eventually be $110 billion company. So why when it IPOs without the financials backing it, would you buy what it could be fully valued at? So when it IPO'd at closer to $45 billion, it's like, okay, it makes sense that you get a little bit of growth in there. But I think that they were still slightly ahead of themselves. But to me, I think that this could be a $100 billion, $120 billion company in the long term. So yeah, the stock's dropped. I'll own that. I mean, I can't say that it can't, but you don't know how these IPOs are going to perform, right? Some people might have been like, oh, look at Palantir, right? They're pricing in, and I know it's a completely disparate business, but it's, from a stock price perspective, they're turning in what the company will look like in 2028, 2029, and saying, okay, let's value it for that sort of scenario, versus Venture Global here. They're valuing it pretty much for bankruptcy. Not really, but I mean, they're valuing it based off of a price to EBITDA for 2025 of close to, I think, 2.5 times. And so it's pretty cheap. in that respect, and who knows what the future will bring. But I'm cautiously optimistic that if I want to own something that has low innovation risk, why not own something like this? I mean, 100 MTPA, you start doing the math, that's a lot of revenue to generate, and I'm cautiously optimistic you're going to be able to generate about 35 to 40% net margins on that. So, I mean, you talk about how much income it's going to be. I think it's a decent investment. They're going to be able to buy back stock in the future, pay dividends. They already do pay a dividend. So, I don't know. Long Venture Global for me.
Well, Matt, you speak his name, and he appears.
Hot Kris.
Kris Patel.
Can't ever wake up for Cash Flow Chronicles, but here we are on a Saturday.
I was actually helping my wife. So she's working from home now, which is great. Yay!
That is great. Yay! Kris is going to start taking a lot more walks. No, I'm just kidding.
I was helping set her office up and everything, so it took some time. I've just been busy at work. That's why it's been a little bit hard to get everything. But we will get Cash Flow Chronicles back to its usual two times a week, hopefully. Once we catch up.
Does the wifey like the new setup?
Yeah. She really likes it. Like, I have a nice giant L-shaped desk. I got her like a Dell portable dock that like sets up everything. So all she has to do is just press one button and everything automatically connects. I even changed out the lighting fixtures in the room to be enabled by Alexa so that she can just tell them, what to do. I mean, I'm not done yet. I still got like a little bit of handiwork going on because since she's going to be working from home, I want to try to make it as perfect as possible so that she can compartmentalize. I think when you work from home, she's done nothing but work at the hospitals for like the last 10 years. So I want to make sure she compartmentalizes that. And I also don't want her using my office. Yeah. So I'm like, no, I'll build you your own. Don't mess around in my office. Like, leave my shit alone. I'll hook you up with yours. So yeah, but the reason why I came on is because I really did want to chime in on this Venture Global thing. I know a lot of people, they keep asking, especially on Twitter, hey bro, what's going on? How come it's down? How come it's down? And
cautious of what you talk about, Kris.
Yeah, I have to remind people that, in the short term, sometimes volatility, sometimes, all right. So sometimes in the short term, the market looks at other factors and says, do I want to take a risk on this company based on these specific factors? And a lot of times short-term investing comes, people's valuations come from that short-term move in underlying things. So as an example, you look at the spread on Henry Hub and TTF, right, which is what they pay in Europe, and that spread has been closing. Now everyone thinks, wow, that spread is closed. All of a sudden, Venture Global's business model isn't nearly as profitable as it was a year ago. That means the stock should be lower, right? But then what happens if that spread reopens again? If the spread reopens again, everyone's like, oh my God, I need to buy Venture Global, right? So whenever you have these companies that are exposed to the commodity side of things, this is what happens. You get these moments of weakness, and then you get these moments of, crazy upward moves. Now, the one thing people have to remember when it comes to business, when it comes to Venture Global, it's just like any other tolling company, is that eventually most of their profits are not going to be coming from spot prices like they are right now. They're actually going to be coming from fixed contracts that they have. So anyone thinking that this company is going bankrupt, not happening. They can cover their debt very easily from already fixed contracts. Those fixed contracts, one of them is already in play and generating about 400 to 500 million in EBITDA. And then Plaquemines, the contracts are going to be coming in at the end of next year, so 2026. So those are going to be fully contracted. So the chances of bankruptcy for this company are actually a lot lower than people think. And at the end of the day, if they right now just said, you know what, we're not going to do any more expansions after the current phase 1, 2, and 3, or phase 1 and 2 of Plaquemines, and we're just going to cancel all future projects and just now go into cash flow mode where we, rely on nothing but cash flows that are incoming, the stock would get re-rated much higher. Why? Because then what happens is now you have a bridge saying, you know what, there's no risk of additional growth. I mean, not additional growth. There's no risk in building out another project that's not necessarily going to generate profit or not. So the uncertainty factor goes down very quickly for these guys. So they can cover their debt very easily, which is probably one of the reasons why they canceled Delta, right? They said, you know what, Delta is way too far along. Let's not invest in a project that may not be economical. Let's actually just utilize our own existing infrastructure and just build upon that. And so this way they can actually have a material boost to profitability, because the margins on a brownfield project are much better than a greenfield. So when it comes to, and for people in the chat, a greenfield project, and when there's nothing but like a forest and you're clearing the entire forest, you have to do all the infrastructure work. You have to bring all the pipelines to it. You have to build all the shipping channels and the jetties and everything else. The cost of developing all that additional infrastructure is enormous. With expansions like they're doing with Plaquemines, all they're really doing is adding more liquefaction trains and then utilizing the existing pipelines, the existing jetties, and the boatways. So this way you're not building more, right? And that's one of the benefits that they're going to have. If you look at Rio Grande, that's the same exact thing. Trains 1, 2, and 3 are there, but they also have all the infrastructure that's built to supply gas and all the ports and everything else. So all they need to do is just keep adding more trains. So the cost of train 4, 5, 6, and progressively so on are going to be much cheaper than trains 1, 2, and 3, right? 1, 2, and 3 are the ones that basically are going to finance the build out of 4, 5, 6, and so on and so forth. So Venture Global is kind of in the same thing, where Calcasieu Pass paid for Plaquemines. Plaquemines is going to pay for CP2, right? And then CP2 is going to pay for Plaquemines expansion. And so Venture Global is going to get to the point where it's a self-sustaining business, where they don't have to necessarily rely on future contracts unless they really want to. The other thing is, from a demand standpoint, I think some people think like, oh, in the future, there's not going to be any demand for natural gas. And I have to point to people like, can you open up my Twitter, Stephen, and just show people my post this morning for electricity? I think it should be right at the top.
Yep, going right now.
Yeah. But basically, if you guys think that we're going to be using less electricity 10 years from now, I don't know what to tell you. We're going to be using more. And at the end of the day, not only are we going to be using more, but there's other supplies that are much, much dirtier that are going to get replaced by natural gas. And then there's other people that are saying, well, what about solar and wind and hydro? Are they going to eventually replace natural gas? And I'm like, look at how much capacity they have. Even at the current rate of growth, how much it would take to replace them. So just blow that up for me. No, just go down, and if you click on the picture, it'll make it. There you go. So look at solar, look at wind, look at hydro, and then look at coal. Coal is still the dominant part of the electricity generation ecosystem. And look at the number. Look at gas. Look at how much gas is expanding. The key here now is that with companies like Venture Global, with Next Decade, with Golden Pass, all of these guys, you're finally going to have, especially around the world, way more reliable source of natural gas in the future. So the price of the commodity fluctuations is going to basically, over time, level out. And once you get that leveling out, you're probably going to see a lot more adoption of people saying, you know what, if I can sign a 20-year contract for natural gas and I can get it at a pretty decently fixed price without having to worry about crazy fluctuations in natural gas prices, then they'll switch off of coal, and they'll probably expand their gas supplies exponentially. So I think right now we're going through an air pocket of basically like US natural gas becoming a little bit more expensive and European gas kind of becoming a little bit cheaper. And I think that spread eventually is going to level off, in which case we'll probably see a $4 to $7 spread sometime. And, Venture Global in the short term, right now, it's projecting out a $4 spread. In the future, it could be a $6 spread, in which case the profitability shoots up significantly, right? And then remember, once these things go into fixed contract, that means that they're going to be generating enough EBITDA to, one, pay off all their debt, but then also utilize some of that additional cash flow to build on expansions. And I think that expansion capacity is something that shareholders should be looking forward to. If Venture Global and Rio Grande and all of these guys, they were really like not confident on the future of LNG, they would not be getting 20-year, 30-year, 20-year deals with all of these utility providers in Japan, South Korea. Look at all the deals that they've been signing, right?
I do want to add two things to what Kris said just about the use of energy, because I'm not an expert on VG by any means. When you look at the projections, and this is from the EIA, these are not made up numbers by Steve, okay? You look at the amount of electricity needed for computing through 2050, this is for the next 25 years, and ventilation, it's going off the charts. And then on a short-term basis, if you look at where the EIA sees world production and world consumption through 2026, it's up. It's just going to keep going up. So the idea that we need less oil and gas couldn't be further from the truth.
Yeah, I mean, look, when you invest in oil and natural gas, bro, just be ready for volatility. This is one of the things that comes with the market. I've invested in oil and natural gas for a very long time. I've dealt with this commodity cycle where things have fallen off and then they've picked back up again, and this is what you're going to deal with. You know, the key here is that if you understand the business model, you'll realize that right now the commodity cycle is going to impact a company like Venture Global significantly. But over time, the business model allows for steady cash flow that's not going to fluctuate as wildly as it is right now. Right now, some people were in the chat were asking, you know, like, what do you think the price target for Venture Global is going to be 2 years from now? And I don't know about you, Matt, but I can't tell that. Why? Because one, I don't know the impacts of the lawsuits, what the total arbitration value is going to end up being. Nor do I know what the price of natural gas, like that spread, is going to be in the next 2 years, while Venture Global is getting a lot of their operating income from spot pricing. So once we go further out, it actually becomes a lot more clear. So in the short term, it's kind of weird in the sense that we can't tell what's going to happen in the short term, but we can definitely tell you what's happening in the long term. And the long term tells me there's going to be more demand for natural gas. These guys are going to provide that natural gas. That's what you want to be.
Yeah. No, I think a lot of people need to recognize that pipelines are a little different, but even still, pipelines can get impacted by this as well. Oil and natural gas is a very cyclical business, and you'll go through peaks and troughs. And there's a reason why I liquidated a lot of my oil and gas funds in, I think it was like June or July of 2024. Sorry, it was 2023, I believe. I'll have to go back and double check. But it's because, you know, did I see the potential for a lot of those companies and names to continue to run? Of course. So, you know, I loved Exxon, but I was buying Exxon during the midst of the pandemic, right? Like I bought Shell and a few other companies in the midst of the pandemic when the oil price dropped to basically you had to pay people to take it, not just pay for it. So I think a lot of people don't fully recognize that there are certain industries out there that if you're going to be investing in things individually as equities, you need to understand the sectors and the quirks of each sector, right? Like just like you can't use price to EBITDA to evaluate real estate investment trusts. Need to understand that oil and natural gas companies are going to be likely very cyclical businesses. You need to understand when's the time to slowly accumulate and when's the time to like dump both feet into the pool. And so just use that with a little bit of caution. And to me, you know, knowing what I'm seeing now, it's reasonable for me, not for you, but for me. It's reasonable to say, okay, this is kind of a perfect storm for natural gas at the moment. You have an increasing rate of price environment in the United States and a negative price environment in Japan as well as Europe. I would take advantage of it, you know, or I am taking advantage of it. I don't think that you guys should. It really also depends on your risk tolerance and what you guys like to invest in. But to me, I think it's a no-brainer. And just looking at the pipeline of future projects, it's gonna be like what Steve said earlier, a midstream like company in that respect, where you're going to have a decent amount of debt, but all that debt is going to go to stuff that yields 30 to 40% rates of return, returns on equity, which, yeah, it's going to require some leverage. But when you start to have the opportunity to get and generate lots of EBITDA from that, you're going to be able to refinance the debt at much cheaper prices. And some of these things, I think as well, not all these contracts go for 20 years. Some of them are only for 3, 4, or 5 years. And then you have excess capacity. That could be a positive or negative, depending on what spot prices look like in the future. So,
yeah. One question that someone had in that chart, where's fuel cells? Okay. There's no such thing as fuel cells for energy. Okay. Let me explain why. Fuel cells are just a form of storing energy to the next level. So as an example, hydrogen. Well, where do you get hydrogen? You don't mine for hydrogen. You don't drill for hydrogen. Hydrogen is a byproduct of other fuel sources, like especially natural gas, right? Or using electricity, which you basically what you're doing is you're taking natural gas, you're burning it, turning it into electricity, and then you're using electrolysis to then split the hydrogen, split water into its two components, which is hydrogen and oxygen, and then you're getting quote unquote hydrogen fuel cells, right? Or you can actually do a fuel cell with just straight natural gas. But there's no such thing as, there's fuel cells as being a part of the electricity like natural resource. That's not how that works. I just want to let you know, like, that's why you don't see something like fuel source in there, right? So it all kind of depends on how you generate those electrons. You can generate those electrons through solar, through wind, through natural gas, through, burning of coal, whatever. The point is you're basically unlocking energy, and fuel cells are just a way to unlock the energy that you're taking from one source and turning it into electricity, basically. So that's all it is. Yeah. Fuel cells used to convert H2 to electricity. What? Yeah, but then how do you generate that H2? Raj, how do you generate that H2? Please tell me. Tell me about the hydrogen mines that exist around the world. I see it in heavy-duty vehicles. I agree. You probably see H2 in heavy-duty vehicles, but how do you get H2? We've seen demand in fuel cell buses for the last 2 years. Right, so how do you get that H2? Please enlighten us, Raj. I'd love to hear that. The way that you get H2 is, I told you, electrolysis, man. Gold hydrogen is a new thing. We are all fuel cells. Stop preaching they can do buybacks when they're 80 from whatever. Yeah. Green from renewables, gray from gas. Yeah. Indian on Indian violence. Yeah. No, I really want to know, like, how do you, so you could set up, and this is something that I thought about in the past, like, what if you just took like a wind turbine, combined it with the water source, and then the wind turbine spins, takes the electricity, splits the hydrogen and oxygen, and now you've got yourself H2, right? That you can use for fuel cells. There's a problem with that. Do you know what the problem is? Number one, the amount of electricity that's needed to split water into H2 is high. But then how do you gather all that H2? Once again, it comes down to, you need to have the most efficient infrastructure to get H2. Okay. And one of the ways that you do it is by, and like I said, that's why H2 is a bridge fuel, not necessarily like something that you can just mine out of the ground or take out of the ocean, so yeah, it has to be electrolysis at scale. Exactly. Sorry, I don't know if you guys have any comments on that.
No, I'm not on the fuel cell train.
Yeah, I am a big believer in energy storage, and I think there could be a lot of usage for it, specifically in helping remove peaking and things like that. But I think, I think anybody that's interested, I mean, I could go down a big rabbit hole, but
Yeah.
I like energy storage.
Even someone said, what about like desalination? Once again, desalination, you're doing the same thing. You're taking electricity, you're putting water, and you're basically taking that water and putting it through a filter and basically keeping all the salts out, and you're generating water, right? So you're using this mesh, I forgot, reverse osmosis. So it's high pressure. And so this way you're taking all the salts out. The challenge with desalination is, once again, you need a lot of electricity for desalination. You know, the Israelis, by the way, are really good at desalination. They've actually built some of the best technology on it. Osmotic mesh. That's right. Yeah, but the point is, energy abundance is going to unleash mass abundance if we ever get to the point where fusion becomes a thing. Like, the only thing that I think in terms of like humanity progressing to like the stars is if we ever get to the point where fusion becomes an actual technology. But I don't know how long before fusion actually becomes a thing. Maybe another 20, 30, 50 years. I don't know.
Kris, on this topic, and Matt, you ever see the movie Chain Reaction? With Keanu Reeves and Morgan Freeman?
No.
Really? Wow.
Yeah.
Right up the alley on this conversation.
Yeah.
Matt, any other companies in the energy patch you want to talk about at all? Because I think that we're going to get maybe not a rotation, but I do think more capital is going to go into the energy sector in 26 due to lower rates, risk-free rate of return declining, and the fact that there's a lot of energy companies that look undervalued.
Yeah, I mean, I've started to dip my toe back in since oil prices went below 60. I remember having a lot of debates with people in 2024 when we were kind of hanging out in the 70s and mid.
Your mic's going in and out, Matt.
Matt, are you
What about now? Okay, it should be good. I don't.
Yeah. Are you changing your setup?
Yeah, I got a little tripod and things like that, but I don't know why the heck this USB keeps coming in and out.
Do you have a gate limiting like mic thing?
Hold on a second.
Like, yeah.
Kris, have you been following this whole Bloom Energy story?
Yeah, man. It's all natural gas. Once again, the good thing about Bloom Energy is that even though it's natural gas, we have pipelines everywhere. So these guys, they're able to sell these Bloom boxes that turn natural gas into electricity without burning it. Right? That's exactly what they do. They literally have a catalyst. They take natural gas, they put it through a catalyst. The catalyst ends up separating the electrons, and the electrons are then siphoned off, and now you got yourself electricity, which means that you can pretty much take these Bloom boxes and put them anywhere. But once again, you need to feed it with natural gas. If the price of natural gas goes up, no matter how good your Bloom Energy box is, you're going to pay more, right? So that's the difference. Whether you're getting it from the grid or you're getting it from straight natural gas, there's a big difference. I don't know what the spread between buying a Bloom box is versus getting electricity from the grid itself, because I'm sure that there's a markup in the electricity from the grid, so that's what you're basically playing at. So if natural gas goes down, electricity prices stay high, then maybe the arbitrage with Bloom Energy boxes actually works out well,
I gotta tell you, when I look at where we are in production, it's really crazy that we're approaching 14 million barrels per day. Have you seen the latest chart?
Yeah, I mean, dude, the U.S. energy sector is one of the most innovative sectors on the planet. Everyone has been calling for the doom of U.S. LNG, U.S. oil and natural gas. And somehow, I mean, Matt's in the sector, so he can enlighten you. These guys just innovate. They know where the oil is, they know where the break evens are, and they figure out how how to get their break evens lower and lower every single time. Oil comes down and they figure out how to make money, you know. Now some of it's on the back of bondholders, don't get me wrong, but yeah.
Up and to the right. And I don't think this is stopping anytime soon with the amount of data centers coming online, and not just data centers, the amount of third world countries that are increasing their standards of living. When you have that and more prosperity in those areas in emerging markets, you have more refrigerators, more air conditioners. All these things need power, more vehicles. So this is a story, I think, that we need more energy across the board. And there's a lot of interesting plays in the oil patch right now, in my opinion. So I actually just became a shareholder of Chevron.
I don't know why we don't just pool our money together and buy some land with some.
Oh, dude, are you are you going off of what our buddy said in our group text about buying freaking oil wells and rigs?
I didn't like who Ken? Ken said that?
Ken is on this. He's been trying to get me to do this with him for over a year now. He must have watched these videos on YouTube about these people buying freaking oil, like land in Texas, buying individual rigs, because he sent me prospectuses on this.
Buying wells.
Rigs,
yeah,
same thing. But
no, it's not. The rigs are what develop the thing. Well, yeah, the rigs are what develop it. The wells
what produce it. No, it's the rigs. Yeah. It's renting the wells and buying the rigs and paying the royalties that actually produce the barrels per day.
Matt, can you explain some of the unit economics works?
They're actually interesting.
Can you explain to us how can you explain the unit economics of how this works? Like,
so Matt, here I'll start up for you. Ken has been trying to get me to buy land in Texas or rent land in Texas and set up oil rigs on it in order to produce X amount of barrels per day, pay the mineral interest and the land interest, and come away with the spread. And I will find what he sent me, and I've watched a couple of videos on it, and it actually looks freaking profitable.
It's almost like you could start an oil company doing that.
Some would say you could.
We don't have that kind of capital, brother. I'm sorry. If we had the land, we could probably get some royalties off of it and then do the developing ourselves later on. But no, the only way that there's alpha in this is by utilizing Matt's brain. See, Matt, what people don't know.
Did Ken watch the first episode of Landman and then like ChatGPT and say, how can I make money off of this?
What we need to do is we need to figure out how to get Matt all these geological surveys on the cheap and figure out where the oil is actually buried. That's Matt's specialty. He knows how to find oil. He's like a truffle pig with oil. Ooh, oil's here. Let's go. Let's start. Is that what you do, Matt? I'm sorry.
No, yes. It's pretty much it. Yeah.
There you go.
So no, I mean, really, I know I do a lot of yeah, it's what I look at pretty much.
So 9 to 5. If that's what we need to do, Stephen, what we need to do is figure out where
Kris,
the oil
is. Look at your WhatsApp real quick.
We're not still going landman.
This is the type of shit he sends me.
You know, Billy Bob Thornton in the first episode, he explains how he went broke, right? That's why he's working for Monty.
That's why I want to use Matt's money.
Jesus Christ, man. Even Matt's like, nope, not doing it.
I think it will be interesting. What I will say is I don't foresee U.S. oil production declining much below 13 million barrels a day, 14 million barrels a day until like the beginning of 2030. But you've already started to see the productivity declines in the Permian. So unless, and I'll caveat this because we also thought that we were at peak oil back in the 70s and 80s until we started to really start to see the benefits of innovation and technology utilized in some of these wells. So unless there's some sort of new technology that allows us to get productivity gains again, I think that we're kind of at a short-term peak in U.S. oil production over the next 1 to 2 years. I think it's going to be very difficult. And so Permian is already started to see productivity declines, which Permian, for anybody that is following or not, produces about 50% of the U.S. oil production. About a quarter of it, maybe slightly less, comes from the U.S. Gulf of America, and then the rest comes from all the other basins in the United States. But you're starting to see productivity decline. I think Bakken produces like 2 million barrels a day as well. Bakken does a really good job. But to think about it all, it's like, well, where are you going to see this continued growth? And I think it's very tough. I'm trying to understand where the next potential big basin might be, because right now it's the Permian. Once the Permian kind of hits its peak, which I believe it is, it's within 10 to 15% of its peak. Where do you go next after that? Because after that, the Permian's going to be on a decades-long decline.
The Eagle Ford.
No.
The Eagle Ford's good, but it's already been developed. It's still growing, I would say, but I don't think you're going to see massive gains out of the Eagle Ford as you would say the Permian.
Can you bring up this map real quick? So these are like pretty much all the
major shale basins. You got the Marcellus up there.
Yeah, the question here that I have though, and maybe you guys have this. The break evens here for natural gas in West Virginia and Pennsylvania in this area, if there is a collapse in natural gas prices, can we buy some land over here maybe? What do you guys think about that?
I'll throw in,
because this is coal and natural gas country right here.
Yeah,
a lot of coal comes from West Virginia, and like,
I mean, part of that's Pennsylvania, right?
Yeah,
Southwestern.
Yeah. Ohio, Pennsylvania, West Virginia, this whole
region. That's the Utica. That's kind of the Utica basin. Yeah, the Marcellus overlies. So the stuff that's in southwest Pennsylvania, once you get on like the real border of Pennsylvania, in Ohio and West Virginia, that's where the Utica kind of shows up. And then you'll see Marcellus kind of plays into that West Virginia all the way to the northeastern part of Pennsylvania.
So these are in operations. This is in development. So if you guys want to see where the latest discoveries are. So right now, there's nothing new that's developing right there. You can see discovered. So there's some discoveries in Kansas. Yeti, Equinor found an oil and gas field over there. Of course, there's going to be the Gulf of America, all this stuff here. But dude, drilling out there is like I'll never touch offshore ever again.
That's where I live, man.
I know, but I can't do it anymore, man. I'm too scared offshore. But operating, it's been a lot, man.
You got the Bakken
and now
up there.
Yeah. North Dakota, we've got a lot. I don't know, boys. Let's find some green fields where there's oil that no one knows about, and maybe we can buy some
Utah, baby.
Oh yeah, like we're gonna find oil before freaking Chevron and Exxon.
There's a small bunch of basins that all kind of conglomerate over top of each other in Utah, and some of which are like extremely waxy, and they're more like pitch than they are. But the Green River Formation has like billions of barrels, potentially even trillions of barrels of oil, but it's just locked up. So you would need a lot of heat to potentially move it. But then there's also the Uinta Basin, which produces a good amount, and I think they're producing up to like 200,000 barrels a day. There's a bunch of different overlying basins. That's where the money's at. If I were to buy land and try to speculate, that's where I would buy the money. That's literally like, if you're able to figure that out, that's the next Permian. But unfortunately, it's just, you kind of have to do what.
Stop giving her. You just gave away our thing. Now we're gonna be competing against Billy Bob Thornton, bro. What are we gonna do?
I know.
Oh no, Billy.
That's part of the tough. That's part of the tough part about Canada as well. Is the oil sands is like, well, some of it you can mine like physically, others you have to steam drain, and so yeah, it's a little bit tough. You might have to do something comparable to Anyway, I'll stop.
Yeah. Come on.
I'm looking for a chart that I put in one of my articles.
Yo, U.S. Geological Survey. I'll send this to you, Matt. You tell us where to buy land, okay?
Matt, you ever watch the guy sent you the mineral guy?
Which guy?
I sent you something.
That's what we could do. We could. If you think about it, that's legit. What you could do is you can. There's the actual. There's so many different parts of the oil business that you can get involved in.
Look at what I sent you on WhatsApp. You ever watch that guy? You start watching him. Ken put me onto this guy. I swear to God, you just want to start buying land.
Let me mute myself.
We'll see. I mean, I'm interested. I've always been interested in this, but I do think that there is an opportunity in energy companies for next year. You got big dividends, big buybacks, and energy's undervalued right now. Like, to me, there's no reason why Exxon and Chevron are trading where they are.
Yeah, I mean, it all depends, right? And this is what I try to like. Oil and gas is not all the same, right? Like, you can't bucket Energy Transfer with Schlumberger with Exxon. They're actually while you what'd you say, Steve? Sorry.
They're different businesses.
Exactly, they're disparate businesses. I think everyone kind of piles them up as oil and gas. Like, and same thing with like what we're dealing with Venture Global in next decade. They're just like, oh, oil and gas. It's like yes and no. Like they all have their own part about the energy infrastructure and energy business, but they're all completely different. And so the models and margins and how the businesses are run, and some are MLPs versus C corps. Like this is that's important. And so if you're going to be investing in these things, you can't just be whimsical. Otherwise, you're going to lose your shit. And so, I try to, I think a lot of people, they might be investing in ET, like, why isn't it 5X yet? It's like, well, that's not the business, right? Like, you gotta know what business you're in. Otherwise, and I think that's part of the problem with individual retail is they just want to find nuggets, but they don't want to put in the work to understand what those nuggets can and can't do. I think Energy Transfer is a great company, especially if you're looking for diversification, dividends, and you have it in a tax advantage account. But I think a lot of people will try to put all buckets of stocks in like one or the other. Like, oh, just because I'm buying a stock, it needs a 10x like Nvidia. It's like, well, that's not what the company is out there to do. It's in a different maturity stage. And so anyway, I just caution people when you invest in certain businesses, you kind of need to know what and why and when the things may go well for you or poorly for you.
Dude, we are sitting on so much oil and gas in this country. I mean, look at this. So much. It's a beautiful thing.
What are we buying, Stephen? But yeah, anyway, I was telling, I like NOG, Northern Oil and Gas. They have 4 or 5 big basins that they're focused on. They're non-operated. The benefit of being non-operated is that you don't have to be the one. You're closer to minerals, if that makes sense. So like the minerals business is strictly like you own the mineral rights to the land, and so you get anywhere between a 10 to 25% royalty, which you don't actually have to pay any money into, versus obviously you have to buy the mineral rights, right? Of course, but or own the land, which has mineral rights associated with it. But at this point, people are smart in Texas. They generally sell the mineral rights and the land separately, if they can, so they could separate and still live there, but also get the finance. So anyway, you just have to be cautious. Like you can't just buy land. You have to make sure the land is inclusive of mineral rights, especially in these more oil prominent factions. But the non-operated piece for Northern Oil and Gas, they still are part of the upstream drilling part of it, like the rigs and constructing of wells, etc. But they're not the ones that are actually drilling it. They're just more of like a capital financier, and so they can keep a lower overhead. So it's beautiful because Yeah, so you can still partly pay for if you're kind of an operated business, you can like back charge your employee, like you can back charge for, hey, we're the one that's operating it, all that. But at the same time, you still have to pay for all the overhead associated with all those employees, all the insurance, all the, cost of their 401k, etc. Versus if you're non-operated, you just have to make sure that you're making the right investment decision to invest in that well. And so I really like Northern Oil and Gas. Their EBITDA margins are really good. They're in the right basins. They're small. I think they could be an acquisition target. And in the meantime, they pay a good dividend. So oil prices are slightly low here. I'm slowly adding to that. And then same thing at Granite Ridge Resources. I think that's another decent one as well in the right basins. Once again, that I think are going to continue to expand. Meaning what basin is it? Uinta Basin. So
here's a question. Do you guys think what do you think like spot oil prices are going to be like a couple of years from now? Because that's something that I worry about. Well, not worry so much, but from an economy standpoint, if we get a spike in oil prices, then of course we could get some inflation. But this looks very, very deflationary. Can you share my screen real quick, Stephen?
Yeah, I mean, you were clicking on so many things. I didn't want to bring it up.
Sorry. Yeah. Look at this deflationary wave, like all the way from $115 a barrel now down to like 57, right? Like, do you think that this levels off somewhere? Like, I don't know how many plays are going to be break even at $50.
So I'll tell you this, and Matt's obviously the expert in this, not me, but I think that we level off no less than 55, and we're going to stay between 55 and 70 for a while. The reason is, just from a business standpoint, if oil gets too low, oil companies are going to stop producing as much until supply and demand even out. And 55 to 65 is probably a very big happy medium between where input costs and energy producers are all doing well, and it'll be good for business. So I think that's ultimately what they're going to be looking at.
See, this is why we call which is why we call natural gas a goddamn widowmaker. Look at this. It spiked all the way to 520 per MMBTU. Now it's down to 4 in 2 weeks?
Crazy.
But that's why I think you've seen a short-term price spike in not the huge spike, but you started to see kind of VG and Next level off at where they're at, because now you're starting to get some of the spot pricing back that people were so concerned about. Because everyone's like, oh, it's going to 5, 6. Where's it going to stop? But yeah, see, you're starting to see the Europe go in the opposite direction.
Yeah, it's starting to climb up again. I mean, I'm thinking Europe probably starts to refill as much as they can, probably midway through their refilling cycle. And I think
I'm thinking February, March will be very interesting for these companies.
Yeah, I mean, it happened last year too. So it went literally in February, all the way to February again. It could repeat the cycle again, especially if they have a cold winter, where they have to do a lot of filling. Not to mention, any excess gas that they were supposed to be getting from Russia is all going to be done by, I think, 27. Like, they're going to be completely
all LNG stops. I forget what it is. It's spot prices stop. Spot market stops January 26th. All other long-term prices for LNG coming from Russia stops by mid 26, and then I think it's by Jan 2027, or maybe it's mid 2027.
Yeah, look at this.
All pipeline gas stops.
There you go. EU agrees to indefinitely freeze Russian assets. So, I mean, this is good. Europe is standing up for itself. Now, here's the thing. Everyone on Twitter is hating on America, but guys, come on. We got you that LNG. That's why you're not freezing right now, baby. Venture Global, all these LNG producers, they all stepped up. They got let me see. So these are the rules that they have. Oil and gas strike a deal on rules to phase out Russian gas imports for energy secure. I just need dates. Full ban at the end of 2026 and then autumn of 2027. I mean, this is exactly why Venture Global is probably like just saying screw the short-term BS. We're just gonna invest through the cycle. I mean, this entire air pocket is stupid that Venture Global is trading this low, but whatever. I'll take the discount and I'll add to my position. I told you my goal is to get to 100,000 shares of this thing and then give it to my grandkids, hopefully. Because by that time, this thing will have 10x, and then we'll be collecting $2 in dividends, which at $6 a share is what, like 20-30% return on just dividend income? And it's a C Corp, which means all the dividends will be qualified.
I really wish you didn't say that.
Why?
Because now you just said a number that you want to get to, and I'm like, if Kris is this bullish and I trust what he does his due diligence on, and I don't have a position, I mean, that may have been the freaking thing that just threw me over the edge after listening to Matt for 25 minutes about Venture Global. Between the two of you, I guess I'm going to join the train this week and start buying.
Good. Get in on the fun. We don't want to be bag holding by ourselves, right, Matt?
I'm happy to bag hold with you guys.
You're gonna have to help pay for the private jet fuel, bro. You know, me and Matt will cover the jet, but you got to help us with the fuel.
I'm coming on board this week.
Do your independent research, Steven.
I've done my independent research, Matt.
No, you haven't. You've listened to us and our
no, I've
to
done
convince you.
You guys threw it over the edge.
Look, what we do as investors is different, you know. But look, I still have a very big position in Meta. I have a huge position in Google. I have a huge position in Nvidia. This is one of my smaller positions, especially because it's gone down so much. But I am going to add, like I said, the goal is to get to 100,000 shares of this thing. If I can get to 100,000 shares, I'll be happy. And I think yeah,
I'm going to start selling calls on Nvidia and BMNR, and just use other people's money to buy it. That's it.
And then just wait 10 years.
Yeah.
Yeah. I wonder what TTF prices are going to be when all of this stuff comes online with all the Russian gas getting cut off. How much is actually still coming in from Russia?
For what, natural gas?
Mm-hmm.
I can tell you on oil.
It decreased year over year. A number that I saw was like 45% in 2024, but it dropped down to like 15 to 20% in 2026. Or sorry, 2025. Oh my god.
Let's see. I can't get you production numbers on gas, but I can get you production numbers on oil for them.
Well, trends from right here, Russia fossil fuel export revenue, but this is probably not from just Europe. The Indians and the Chinese are probably buying as well. Okay, here it is. Moving away from Russian gas. This is from the EU's website. So they used to get about, wow, they still get a good amount. They've cut 2/3 out. And if they go completely free, that's still all of this production. And the US has been went from about 19, is this MMBTU? They use a different measure, but they used to have about 19% coming in from the US. Now it's about 45. So that leaves a good amount for replacement. And at the same time, they've been cutting back on the total demand too. Total gas supplies. Here it is, guys. Look, at least from a picture standpoint, Russian pipeline and LNG. So 20 BCM, and this one is 31 BCM. Largest importers in the EU are France, Spain, Belgium. Let's see.
And then when we look at total production on oil, Russia's at 9.8 million barrels per day, where we're at almost 14.
See, the only thing though, guys, just to keep everything in perspective, and we have to, while the Europeans have been declining in terms of like importing from Russia, the Chinese have been importing more, right? So just letting y'all know, it's not like Russia's not sending like able to sell. It's just they're not able to sell to Europe as much. And the Chinese, they've kind of cozied up to Russia, and they've got that the pipeline from I think it's Siberia 1 or Siberia 2. But the Chinese still need a lot more. So yeah. Okay.
Oh, Matt. You going to watch the Rocket Lab launch tonight, Matt?
I'll probably be streaming it.
Nice.
Yeah, I think it's pretty funny. People are like, it's not easy. It's like, no shit, it's not easy. Why do you think that, you know? I think it's pretty funny, man. Like people just assuming that.
I knew that's what you were laughing at, by the way.
Yeah.
Here's a question, guys. Deflation next year or we get another inflationary move up?
I mean, if you looked at the economic data, I'm going to go over all this tonight, but deflationary.
Trump said that by the end of 2026, he wants interest rates to be down to 1% again. I guess I think he meant on the federal funds rate.
Yeah, it's not going to happen. 2.5% is where I see them going. I mean, I just don't think you're going to be able to get the entire Fed to agree to get them under 2% anytime soon. Maybe it does happen. I don't know. I feel like that's such a drastic move down.
Only way I see that happening is if housing collapses on itself, and then we've got a problem. And then, in which case, the Fed has to come in and shore things up. But I mean, I don't know if there's that much left. You know, home prices right now. Let me see. Home prices are declining in a lot of parts of the country now. So, let's see. Can I just say, there's so many people that are like, home prices are going to crash. Home prices are going to crash. And I'm like, this is not 2008 again, man. There's so many people that
crash, but in some areas of the market, they're unsustainable. Some areas of the market, they're fine.
Yeah. Find out if you're okay. Yeah. More than half will see a decrease in 2020. Like according to Realtor, share the screen real quick here. According to Realtor, these are the areas where you're probably going to see payments. This is payments declining. Yeah. Let's see. Yeah, I mean, I know this is accurate for me in Atlanta. Like things are coming down.
I mean, look, I'm seeing, let's stop right there. So number one, New York, and I can tell you that looking at housing prices, I am seeing reductions in housing prices because starter homes are $700,000-800,000 with high taxes. It's not sustainable.
Yeah. For me here in Atlanta, Sandy Springs, 3% decline percentage year over year next year. I wonder how if home prices start declining, I wonder how that'll impact like local governments who have to reassess the homes at a lower price. Because I mean, they've gotten fat. These local governments, they have gotten fat off of asset appreciation on those homes and then raising the prices for
because they can reassess tax bases based on
yeah, which is
it's not in their best interest, but it's all going to be supply and demand. I mean, it all depends. If you get rates down low enough where more supply hits the market, it's going to dilute the market, and if there's more options, you're not going to be getting all these cash offers on houses that are over comp. So we'll see.
Yeah. I mean, take a look at this. This is the number of active listings in the US, and it's not back to pre-pandemic just yet. Like 2016, it was like 1.4 million homes. It's at like 1.1 in October. So this is usually around peak time, and then it kind of goes down into January, people take their take listings down, and then it kind of reaccelerates higher into the spring and summer. So I wonder what's going to happen. Probably decline a little bit here and then shoot up, and we'll probably get back to a balanced level by that we had in 2018, 2019. So I don't know, let me just layer on home sales. Existing home sales. And I'll do percentage change from a year ago. Okay. No, actually, it wouldn't work. Whatever. But the point is, there's a lot more inventory that's starting to kind of show up now. So I think that should help significantly in
and look,
depending
that's
on
good.
where we are.
And it's good because more inventory showing up means there's more activity in the market, which can lead to more construction projects. And
Yeah.
that's what we want. We want the housing market to get unlocked with the rest of the economy.
Yeah, but see, this is one of those things about those deportations that I wasn't a big fan of. Like, I get it that we do have to control our border and all this other stuff, but the number of people getting deported right now is having labor impacts in home construction, right? Like home construction right now, we really need a lot more homes if we want to control inflation. And deporting a whole bunch of people, especially people that work in that one sector, doesn't help.
Yeah, we need roughly 3 million more homes is the number that I've seen.
Yeah. Yeah, I think, and unfortunately, I mean, there are going to be people, that do step up that will, like, it's not like building a home is something only illegals can do. And there will definitely be a lot of people that step up to build homes, but at the same time, it's not necessarily going to be like right away. And the wages that you pay for an American citizen who's freshly through the building environment, it's going to be much, much higher. Now, I'm not saying that's a bad thing. It's probably a good thing for the general economy, but in terms of just raw inflation, illegal immigration that goes to support the labor, like cheap labor, tends to help a lot with lowering costs, So if you guys want, nothing but American citizens working in these fields, you better be okay with paying way more for housing, right? So living wage.
Kris, are you around tonight?
No, I have a poker game with my with my friends and stuff. Yeah, so I'm gonna go like play poker.
Nice.
Yeah.
Nice.
Yes, sir. Yeah, we also have a demographic decline too, so maybe we don't need to build as many houses as people think.
Well, regardless, we need rates to come down. And to answer your question, I do think we're going to be in a deflationary market next year. And based on everything I saw with the Fed, I'm feeling really good about next year. And I'm pretty excited about where we are. Look, if we get more of a drawdown, I'm going to be really happy adding to positions because I'm seeing a lot of good things for next year at this point. And the chances of recession are now less than what I thought they were.
Wait, say that again. I'm sorry.
Chances of recession are less than what I thought they were.
I mean, valuations are high, but
for some companies, but not for many, not for the ones that matter.
I mean, to me, it just goes back down to that damn PE chart. It just scares me. I don't know why. I should be okay with it, but
you should be okay with it, Kris.
I know. I need some hand holding, basically.
I'll hold your hand. You should be okay with it. I mean, listen, is Microsoft expensive here? No. Is Alphabet expensive after that run? No. Is Amazon? No. Now, are there companies that are expensive? Absolutely. Palantir's expensive. Aclo's expensive. CoreWeave's expensive. But those are companies that have little to no relevance on the S&P. Now, sentiment, Palantir, if that draws down, could have people get wishy-washy and start selling off other companies, but every gap gets bought, every downturn reverses, and ultimately from a long-term holding position, the greatest companies do very well. And I'm not seeing a scenario where the MAG or Spectacular 6 don't continue to get bigger next year. And I think that's part of the reason why you got into NVIDIA. And I got to tell you, NVIDIA is a pretty big percentage of my individual holdings outside of mutual funds and ETFs. And at these levels, it gets to 170, I'm buying more.
Yeah. Yeah, I'm trying to read some of the comments. They're interesting. You know, how many houses paid in cash? Can you imagine the amount of credit? Expanding credit is only just going to keep asset prices high. Cardboard
I will
houses.
tell you something about, I'm not going to say what town in Long Island. One of my buddies decided to, and I've showed Kris what town and what the house looks like. I'm not going to say it for certain reasons, but put his house up. He decided to build a new house in the same town he lived in. He put his house up for $970, and he told the broker he didn't think it was worth anywhere near that. He wanted to list it for like $825, and the broker said, "Trust me." I mean, this is just a normal house, nothing crazy.
Yeah,
and he ended up getting 3 cash offers all over ask, and this was a year and a half ago. I mean, there were so many cash offers going out that you'd be surprised. I just don't think that the housing market where I am at least is sustainable. And we'll see.
Yeah, I mean, it's not sustainable, but I don't know if we're going to. I think the way that you get back to affordability is by, one, you're going to see a natural increase in wages, right? So if you see a natural increase in wages, affordability is going to eventually get back to normal again. And if you just have a few years of basically, flattish price appreciation, that helps with affordability too. So if you have a compounding rate of 3-4% on wages, but at the same time, if you have, flat year-over-year growth in housing appreciation, within probably like 4 years, 5 years, you get affordability back again, right? Because wages are always going up, especially if you have a shortage of labor. The real question is, what is home price appreciation going to look like? So for me, I look at it and I'm saying, look, if you buy a home today, you're not going to get the crazy high returns that you've gotten over the last 12 years because you bought during the lowest point in home prices in forever, during the great financial crisis, relative to median incomes, right? So affordability was absolutely insane. The problem was there wasn't a lot of credit to go around. I mean, you had to, because the banks had a lot of challenges with regards to, regulations, they weren't exactly lending a lot of that money out. So I don't know. I think we get back to affordability. It's just a matter of whether we get back to affordability via a crash, or we get back to affordability via natural progression of supply and demand fixing the situation. And I think that's where the government kind of comes in, and whatever policies that they adopt could supercharge one thing or the other, right? If like right now, if the federal government has said, let's take a very aggressive approach to this and just subsidize the shit out of building homes, prices of homes will come down, right? If you just go out there and be like, look, if you build a home, you get, we'll subsidize the construction. How many homes would be built right away? Especially for the next 5 years, you subsidize the cost. You see building all over the place. But that's the thing, from a political standpoint, that's not what you want to do. I think that would set a really bad precedence, because then you would probably see future decline in home construction, because people would just wait until things got bad so they can get those subsidies again. Not to mention, a lot of them would end up not really building quality homes. They'd probably cut cut corners just to get that subsidy. So government intervention in housing does not usually work out well. Yeah. If government subsidizes housing, price goes up, not down. See, Dougie, the government has been subsidizing housing, but they've been doing it via the credit site, the credit markets, where they say that, oh, we'll just guarantee your loans through FHA, right? If there was no FHA, I don't think home prices would have gone nearly as high. Why? Because the only people that would have been able to get loans for homes would have been people with really good credit scores. And the people that don't have good credit scores, they could never have qualified, in which case now the price of or the demand picture would not have materialized. I think a lot of what you're seeing in terms of inflation on the periphery when it comes to like something like housing, even education, is because the government comes in and says, I think everyone should own a home. Let me subsidize the risk. And now all of a sudden the banks are saying, hey, I'll lend out all the money you want. You know, happened with student loans, happened with housing. If you just let the market do its thing and say, okay, you know what, if you want to buy a home, you buy it on your own dime, you know, prices of homes would be relevant to what people could afford, not necessarily the credit people could afford. So, I mean, right now, isn't that the logic that you would use, right? The more you extend credit, the more likely it is that you're blowing up a bubble.
I mean, the more credit being extended is certainly not bullish. I can tell you that much.
Yeah. Yeah. I mean, that's the challenge that you run into with the government, right? Like one side, you kind of do want policies where you have more homeowners than renters, because when you become a homeowner, you do contribute a lot more to the economy of that local area. You also have an equity stake in the local area's development. So you do want to encourage a high percentage of home ownership, but at the same time, you know, the cost is that some of the policies that you create are going to cause bubbles here and there, right? So, yeah, the more demand you create, the higher prices go. Exactly. That's why I'm telling you, the day we started subsidizing homes is the day prices of homes started to get decoupled from what people could afford and what people could afford relative to the credit that they could get extended. You know, California froze its property taxes in the 70s. I don't know. I think what they did was they froze assessments. So when you could buy a home, it's frozen. You know, like the cost, Fannie Mae, Freddie Mac IPOs. I don't know. Same thing happened in college prices and student loans. Yeah, exactly, Austin. That's right. The day that the federal government says, hey, guess what? We'll subsidize all these student loans. The incentive for the colleges was, hey, let's just keep increasing tuition prices because, you know, people could afford it because of credit. Now, all of a sudden,
it's not fungible in bankruptcy court. So why not?
Yeah, and now you've got you got an entire generation of debtors. And so a lot of them don't even have a house to show for it. That's the sad part. You know, you got a whole bunch of education in lesbian art, dance theory, and I don't know how many lesbian art, dance theory people we really need. So,
Matt, what are you looking forward to next week? Anything exciting in the market?
Next week, so Monday, I have my normal buys in. Monday for Bitcoin, Ethereum. Let me go through the list. What do I have buys on these days? It's like 7 or 8 positions. It's pretty much all the positions except for Meta, which I've been buying whenever I think I can get a cheaper price. But let me go through. So Bitcoin, Ethereum, Next Decade, Venture Global, Rocket Lab, Granite Ridge, Palantir, Northern Oil and Gas, Dutch Bros, Amazon. I'm trying to think if there's anything else other than that. Oh, I just like the normal SP 500. So that's part of just the normal 401k / individual brokerage account contributions.
Kris, you making any purchases next week?
Probably not. I'm pretty loaded up on Nvidia. I was thinking about adding to my Elevance position, but I don't know. Like Elevance is starting to get back to normal again. All the healthcare names have actually started to recover. And the thing is, if we do get some sort of rotation, which is very likely, I think we could see We could see healthcare names starting to rise again. Cruise lines will start to catch a bid again. Norwegian went up nicely the past couple of days, which is good to see. But yeah, I think there is definitely a rotation from growth to value that we could possibly capture. And actually, it would be good to hedge against a high beta move down if the markets like AI fears start to get really pushed on the market, right? So the market runs also on sentiment, not just based on what we like it to be. So if there is a fear of AI bubbles, people will say, well, maybe I should dump my NVIDIA and go buy some value stocks. And I think that's what
they can buy Apple, Microsoft, and Amazon.
They can't. Apple is not a value stock. I don't know why the hell you keep saying that.
You tell State
Don't
Street
say that again.
You tell
Don't
State
say
Street
that again.
You tell State Street that.
Stop that. Don't
you
ever.
know they talked about on the Compound and Friends that Josh Brown said the same thing as you. He's like, how are these value stocks?
Don't you ever say Apple is a value stock trading at a 38 fucking forward EBITDA. Please.
Now keep in mind, do it. I am not saying that Apple is a value stock. State Street, through their Spider Value ETF for the S&P, is saying that Apple is a value stock at 8.3% of the holdings. And then Microsoft and then Amazon. Which is, to me, crazy, but okay. The fact that AMD is in there as a value stock is crazy to me. AMD, value stock.
Which moron is running this fund? That's what I want to know.
I mean,
which moron?
Hire Kris, me, and Matt to manage this fund. I mean, $31.67 billion in AUM.
Well,
and they have Apple, Microsoft, and Amazon as the top 3 value stocks.
Oh, value.
Just saying.
It's NVIDIA is trading at a lower forward EBITDA than Apple is, and yet, whatever. Matt, you okay, man? You look kind of depressed. What's going on? You look sad.
No, just answering this person at our Airbnb. She left the cover off the hot tub overnight and then is wondering why it's only warm and not hot.
Dude, I don't know how you deal with these damn tenants and these Airbnb people. I will never become a landlord ever again. Shit's annoying. I still remember one of the guys I rented my apartment to. He's like, I don't think the dryer works anymore. Can you replace it? And I was like, well, first of all, a dryer is not included in the lease. Like, there's a coin operated thing. And I was like, I'll check it out. This guy's never understood what a lint trap is. So the sensor basically was like going red saying, listen, I can't do any more loads because of the heat. It's getting too hot. And this guy think it's broken. I'm like, there's a freaking indicator right that says clean lint sensor. Just, clean the lint trap. I mean, this is what you have to deal with when it comes to tenants, man. Some of them are like stupid as, oh, there's a light bulb that's out. Can you replace it? I'm like, you want me to fucking fly from Atlanta to New York to replace a light bulb? I was like, look, I'll just take it off. I don't even know why. I was like, I'll just take $5 off your rent next month. Just replace your own damn light bulb, dude.
It's not for me. I will never be a landlord. I'll buy a REIT. I'll never be a landlord.
I'll never do it again. Never. Not my thing, man.
I guess it's up to, each their own. I mean, we make good cash flow. The amount in mortgage that we're paying, and expenses and everything like that. I mean, we're probably making 20 to 30% cash on cash, which is pretty good. And then that's not inclusive of the $400 to $500 a month in equity pay down that we get. And we're hoping to refinance the one property I'm talking about with the current issue. And when that happens, we're hoping to save like $700 a month on the mortgage. And so that'll be directly to the bottom line as well. So, don't know what that's going to do to the principal pay down. Obviously, we're going to have to restart at zero. But we're only in it for like the last 18 months anyway. So It's not like you're restarting that far back, but hopefully with the interest rate going down by about 1 to 1.25%. Actually, no, this mortgage is way up there. It'd probably be closer to almost 2% going down from what we bought it at. The principal pay down on a monthly basis would be probably $500-$600 a month, which is pretty good. It's like, you know, most of the time it works without a hitch. So it'll be nice. I'll be there during Christmas. I'll send you guys pictures.
Nice. Yeah, I mean, I to be a good landlord and to deal with all that stuff, you have to have it in you. Some people have it in them, other people don't. I don't. I can't deal with it. I can't deal with people. I would much rather figure out how to invest in people that know how to manage people. But as far as me doing it by myself, can't do it. Not going to deal with it.
Yeah, no, it's not for me. I know several people that do it, including Matt. It's just not for me.
Yeah. Now, I will say one thing, guys, and maybe this is something that we could bring up at another round table. I think we're in the early stages of the space economy.
Oh, you're talking Matt's language right now.
I feel like a moron. You know how much Matt tried to convince me to buy Rocket Lab at $4?
Same here.
Matt, I want to apologize to you. You were absolutely right. I was wrong. I was dead wrong. And I deserve not having that 10x because I was too, I don't even know how to describe it. I was too fundamental on not investing in an unprofitable venture that burns a lot of cash. I should have said, you know what business doesn't burn a lot of cash in its initial stages? That's public. You know, and the logic that you use actually was really, really good logic, which was SpaceX is valued at 200 billion. Rocket Lab is valued at how many billion was it at the time? Like 3-4 billion?
At the time, it was 2 billion.
2 billion. So I was like, now I think about it, I'm like, man, do you know how hard it is to get into space? These guys can do it. I'm sure that they don't have to capture all the market share from SpaceX, but they could capture a little bit and the valuation will get much bigger.
You see what they're talking about going public at, Kris?
Say again?
You see what they're talking about going public at, SpaceX?
I think 800 billion or 1 point something.
800 billion next year.
The internal purchases, because I do a semi-annual share sell was 800, and then the they're thinking about 1.5. But I mean, you don't beat yourself up. I mean, you can only you got to invest where you feel confident, and you neither of you felt confident, so you can't hold yourself to be like, God damn, it's like, you know, you got to stick with what you feel is better. It was just, to me at the time, it was like you stated, it was like, hey, if these guys have an inkling to be anywhere where SpaceX is going to be, and they've already launched successful. When they actually did the SPAC, they'd already launched 17 times, majority of which was successful. And so I was like, you know, that's kind of a no-brainer. They had satellites, they had visions for other stuff, and I was like, you know what? I was like, if I'm going to gamble on something, it's going to be this. And you know, it wasn't like it was a company like Astra that was having like intermittent success and not even getting launches off. So, and that's the same thing with people that are talking about Firefly. They're like, oh, well, Firefly, like, you know, they've launched. It's like, but Firefly is very intermittent in their launch cadence. And of the 7 launches they have had, the majority of which have been failures. So they're almost in a different space than Rocket Lab was, even though they're at a $2-3 billion market cap. So I'm curious. I mean, I wouldn't mind if Firefly went down to like a 1.5 billion market cap. I wouldn't mind buying.
I don't even know what the hell that is.
It's the private company that landed on the moon with the help of with the help of Rocket Lab.
Which one?
Firefly.
Firefly? They actually landed on the moon?
Yeah. First private company landed on the moon, and the telemetry software was mostly from Rocket Lab.
Yeah. All right, boys. Are you guys excited about anything else that's going on in your lives? You know, maybe we could do a group therapy session on catch up on life goals.
Nah, everything's going pretty good.
Yeah. Yeah, everything's going good for me too, man. I'm getting
Steve, man.
I'm feeling like I'm going through my midlife crisis right now. Like I'm at a point where I've realized that I don't want to do anything more for my career progression. I think I've actually checked out of work mentally. Now I'm just on autopilot. Like if they ask me to do stuff, I'll do it. But I'm not like, hey guys, I think we can do this better. Now I'm like, okay, whatever you say, I'll do. You tell me whatever project, I'll add to it. Like my boss asked me a while ago. It's like, hey, do you want a promotion? I was like, no, I'm good. Yeah.
Yeah, it all depends on what comes with the promotion. Yeah, it's good.
You know what? Let's do a meetup. When is that a meetup that Amit is doing again in New York?
February 1st.
February 1st. Are you guys going? Are you guys coming?
I might be in the Middle East, but if I'm not, I'll be there.
Okay, I'll probably be there. Just for the fun of it.
I will be there.
I haven't been to the city in a long time, so.
Dude, it's changed so much.
Bro, I gotta come and see how the caliphate is doing, bro.
Oh, let me show you this. Hold on. I actually took a walk yesterday for the first time, or not the first time. I took a walk after lunch, and tell me if you know where this is. Check this out. You can see straight through the city where I was.
Yeah, I know where that is. That's a Chrysler building right there. So what was that? Not 42nd.
It's 42nd. I was up in Tudor, walking around Tudor City, and took a picture from the overpass.
So I've seen this. You have to walk up from Bellevue. So if you go to Bellevue Langone Hospital, you go all the way down, and this is from the east side looking at west. And I see that the SLG building is right behind that Chrysler building. I still have to go check that
one
out.
Vandy's right here.
Yeah, I still haven't seen that yet. I want to check it out.
Dude, it's crazy.
Mm-hmm.
One Vandy is crazy.
Is this by the United Nations?
Yeah.
Yeah, I know exactly.
If I turn around, the United Nations is legitimately right behind and underneath where I was walking.
Yeah.
It's Tudor City up here.
Yeah.
Think you're better than me, Steve?
No. I think you need to come to New York, Matty.
I am. I was thinking, I don't know. So I wanted to do for next weekend, for the holidays. I end work the 19th, and I was like, well, what do I do? Do I go to Bahamas for a couple days and then go home? Or I have to do some work on the rental property. Just some small stuff here and there. But I need to be present for that. We're getting some small stuff, and so I'm probably gonna be there for Christmas. But I don't know. I'm trying to think. Maybe the weekend after, I'll drive up there and see. But you like to meet during the weeks, right, Steve? Because you like to be.
I mean, it's easier for me to do lunch. Yeah. I mean, if you're gonna be up here, let me know. Me and I are planning to do lunch, so.
Okay.
Where do you guys go for lunch? Like, where have you gone last time?
So last time I took him to Uncle Jack's on 9th and 35th.
Mm-hmm.
Before that, I took him to Ben and Jack's, no relation, on 44th and in between 2nd and 3rd. Matt and I went there also. We went to Patsy's. I'm planning on taking him to Benjamin's this time.
Jeez, man, you really are a New Yorker.
Benjamin's is freaking out of control. Hold on.
What about Del Frisco's, Steven?
It's a hike. Del Frisco's is legit. It's a hike.
Oh, it's a hike. Which one's the one that you think is a Shan? Tourist trap?
Peter Luger.
That's what it is.
So this is where I'm planning on taking him in next.
Maybe you should take him somewhere healthy, dude. He's been gaining a lot of weight.
This is healthy. Red meat, baby. Red meat.
This boy is eating way too much steak, man. He's gonna have a coronary eventually, man.
We're good.
You're all bad.
man.
You're all terrible when it comes to like eating. You know, you gotta eat healthier, man. What the hell? You can't be eating
Good.
steaks every day. Learn how to eat a salad.
Salad's not even in the vocabulary.
Come on, what's your favorite vegan place in the city? Take
We
us
don't
there.
do vegan. I don't eat vegan. Stop that.
What's a vegan?
It's
I'm
weird.
telling
Red
you,
meat's good
eat
for you,
vegan.
man.
It'll change your life.
Red
change
meat's
your
good
life.
for you.
Yeah,
You're letting your-
in decent portions, man. Not
Exactly.
every day.
A nice big porterhouse for two just for Stevie.
You're letting your Desi heritage take a hold of your brain.
Yeah, but I'm also not dying 5 years sooner than I'm supposed to. I feel so much better after I started not eating as much, you know. So I'm telling you, get your health in check, guys. I want to be wealthy and going around to all these crazy places on the planet, but I need y'all to be there with me, man.
Exactly. So come up and I'll take everybody out. Let's go.
Yeah, but you gotta eat healthy. I want to go somewhere
We are
else.
going to eat healthy. Red meat. Caveman diet.
I cannot eat the cow. The cow is sacred.
Slab of bacon.
I will eat some bacon. I'm not gonna
There
lie.
you
I do
go.
like swine. I like swine.
There you
I'm
go.
a terrible Hindu.
No,
We
but
went
in
on-
all seriousness, I am. It's not that Peter Luger's is bad, okay?
Yeah.
So many people are afraid to say it's not the top steakhouse because they feel like they're going to be judged if they don't say it. And then on the other hand, they don't want to seem like they don't know what they're talking about. So they just say Peter Luger's de facto. And it's like, it's not, it's good, but it's not, I'm not traveling to Peter Luger's to go to Peter Luger's unless I absolutely have to for work. Like, not going there.
Everything is healthy as long as you have it in proportion. Bacon, I know bacon is definitely not healthy, but I don't eat
Bacon
bacon.
is
every day.
definitely not healthy.
I don't eat bacon every day though. See, that's the difference. I think once in a while I will have my bacon like here and there, but my wife's been doing this like chicken sausage that's really good. I've been eating that. My mornings like usually hard-boiled eggs, you know, some chicken sausage, a little bit of a salad. Now that my wife's working from home, I think we're gonna try to cook more at home and eat more stuff here. So if you guys come to Atlanta, I'll take you to a whole bunch of Thai places. I love Thai food, so I know.
like Thai food.
Yeah,
like
so
Thai.
I'll take you guys. I usually get the drunken noodles, you know, and there's like this. I don't know if you guys had fish sauce with your Thai food. It's called priklampa. Have you heard of that before? It's really good. Oh, dude, that's like adds to it, man. If you guys are, anyone in the chat, if you guys go to Thai food, you get drunken noodles, ask for some priklampa. Oh, that's what makes it, man.
Kris, I got a farm that you should order from. Hold on.
Where, in Atlanta?
No, it's in New York.
Sorry, this is what it's called. This is the sauce. If you could share the screen real quick, Steven. Right here. It's right here. So
I've had that. Yeah, this shit's good.
yeah, dude. It's like this. It's marinated like spices and in fish sauce. It's like
I don't think that's up Steven's alley.
Nah.
I will say, if you get, it's gonna burn your asshole on the way out. It definitely is not for the faint of heart, man. You know,
That's I tried to get used to when I was living in Trinidad, man. I was
fire butt.
yeah. Well, like my stomach is, our hot sauces are like really vinegary, but
Mhm.
theirs are more like organic, plant based. Like not plant based by like obviously they have the peppers in them, but they're like whole peppers, right? So there's no like vinegar or anything like that. So like it was definitely messing with my gut a bit, which was fine. After a couple weeks, it was perfectly okay. But yeah, it was had to prepare for it.
So a lot of the people in the chat are talking about venison. I'll tell you guys a venison story.
I love venison.
Okay. 2008 to 2009. Fort Sam Houston. I used to walk from my barracks, and this guy would come on base. This guy would venison, slow cook it, and he had some magical rub. Till this day, I have not tasted anything better than that. I cannot find this guy. I've been on Reddit looking for this guy, be like this magical black person. He's African American, but he made this venison barbecue with his like super secret Creole rub, and it's if anyone knows who this guy is, please let me know.
You're gonna get
I've
flooded
been
with
craving
DMs.
that for decades. Decades I've been looking for this guy. Never met him again, but literally there's like a 7-Eleven on base, and he was right there, and I was like, freaking, let me try something. I was like, what is this? He's like, it's venison, and he's like, I slow cooked it, it's delicious, and I tried it, and oh my god, till this day, cannot find this dude ever again.
Never again.
Can't do
No
it.
bueno. Kris, what time are you playing poker?
Like 8:30.
Well, you guys playing just Hold'em or dealer's choice?
I think just dealer's choice.
Nice.
Whatever. It's not me. Like I just got invited, so I'll go. I'll probably do come to Texas. You need to try Axe's venison. The only place I know that's like I've been to what's this place called? That was a barbecue place in Dallas. I don't know. I forgot the name, but there's a lot of great barbecue in Texas, man. That's one thing I really want. Barbecue.
Barbecue. For the people in the chat on my stream, I put Steve's YouTube in there, and we put Hot Chris's X. Kris, you want the X or do you want your YouTube or what?
Yeah, you could just put my X. Eventually, I will start a YouTube channel because I do want to try to explain some things and try to just put my thoughts out there. But you guys know as well as I just can't talk to the camera. I need people to talk to. If I'm interacting with people, it's better. So I have to figure out. I have to get over my my talking to the screen fears eventually.
You do a good job, man. You're fine.
So Matt, the 29th, if you're up here, let me know.
I can make it. I can make it work.
If you can make it
29th
work.
of December?
Yeah.
So my wife is gonna be in Wisconsin.
But Kris, if you're
Or
coming up
maybe-
for the first, we'll just do something around then before. Because you're not going to come up for one day.
No, I'll let you know. Only because like my wife is supposed to be going to Wisconsin for like 3
Okay.
weeks for epic training in January. So I'll probably be free. I figure I could just spend like a nice few days in New York.
Yeah, so let me know. We'll figure it out. Right now we're playing on the 29th to do lunch.
Yeah.
But whenever you're coming up, let me know. I will clear the schedule.
Can we do an international trip, please, guys? Like me and Matt, that sporadic
You guys, man,
time,
have fun.
that sporadic trip that we took to Mexico, that was awesome. We had a great time, right, Matt? Let's do another one.
Steve won't leave.
You guys
Why?
can go. Have fun.
Why are you being like that, Steve? What's
I'm
wrong?
not being like anything.
Come with us. Let's go to Mexico.
I don't have a passport.
I love how you say international, and I'm like, oh, cool.
Hold
Like,
on
I'm
a
gonna
second,
see
hold
another
on.
country, and you're like, we're going to Mexico again. It's like, God damn it. It's like, I love it. But like, I go to Mexico all the goddamn time. Can we go somewhere?
We can go
Let's
somewhere
do it.
else. But Steven just said he doesn't have a passport. Are you an illegal?
No, not last time I
Are
checked.
you an illegal? Are you supposed to be deported back to Italy? Is that what it is?
Listen, I had a
Really?
passport. My passport expired. I never re-upped it.
Don Fiorillo doesn't have a passport?
Yo, what the hell is wrong with you, man? What if you need to travel like
For
outside
what?
the country?
For what?
For what? For like what if Matt finds a really good Jamaican chick and we have to go to a wedding in Jamaica? What are you gonna do then?
Send a check. Have fun.
One
See,
of the
this is
girls
what I'm saying. You're not a good friend, dude.
What
You're
if
not a
I
good friend.
what if I marry one of the girls I dated in Trinidad and I gotta,
That's right.
What am I gonna do?
Get
Have a
yourself a
second.
damn passport. What's wrong with you?
Have a
Listen,
second
if I
wedding?
want to go to Italy, I can go up to Arthur Avenue.
Yo, the flights from Atlanta to New York are cheap. What the hell is going on? Well, that's why
Don
it's Frontier.
Fiorilla.
Frontier Spirit.
Steven's
no
like, you have no
longer-
idea what it's like to be number one.
Oh snap! I got $135 round trip ticket on Southwest.
Oh, that's
Let's
not
go.
bad.
That's not bad at all, sir.
Yeah, so let me know when you guys are coming up,
Let's see.
and we'll figure something out. I mean, Amit's thing is on a Sunday, so if you guys are coming up for the weekend, we'll figure something out on Saturday.
Wait, that Friday?
I mean, his meetup is on Sunday, February 1st. So if you guys are coming up for that, obviously you're not coming up for one day, so we'll figure out shit to do on that Saturday.
That's true.
I'll probably fly in on like Thursday. Just stay the weekend. You know.
Yeah, if I'm
Jeez, even Delta's cheap right now.
if I'm not going to be on business, then I'll be definitely at the meetup.
Yeah, Delta's super cheap right now too, man. All right, well,
But it's not a far drive for me to just drive up for what 3 or 4 hours, whatever it is.
Yeah, I mean, you're where
on
you're
that.
coming from, it's very close.
Yeah, I did the math the other day. Like for some reason, I thought it was going to be much longer. It's really not that far from the beach house to New York.
which days did you say, Steven?
So we're gonna go to lunch for the holidays on the 29th,
Okay,
which is a Monday. His meetup is on February 1st. So if you're gonna come in for that, we can figure something out for that Saturday to go gallivanting in the city, and we'll go to a bunch of different spots and get fat.
I'm okay with coming, so I'll probably do the meetup for sure. What is this? Thursday, and I'll probably fly out on Monday. That is not bad. $58 round trip. What the hell? How are they even making money? Whatever, I'll take it.
I gotta tell everybody, the chat is freaking hilarious. Like I'm reading
Right.
all the comments. Hilarious. Steve has an ankle monitor that doesn't allow him to be away from New York or a dairy farm.
It's the truth.
Y'all want to go on a cruise? We could do a cruise.
No, why would you want to be on a freaking floating boat?
Basically, Steven's like anything that requires a passport, I can't do because I'm an
No.
illegal.
Why go fishing on a boat? That's one thing. Going on a cruise,
we're
no.
friends. You could tell us. We're not going to report you to ICE. Are you an
Okay.
illegal? Are you?
I'm
an
gonna
illegal?
report you to ICE.
I am not.
Steven, if you don't have a passport, you're probably an illegal. I'm sorry. Like,
Just saying, I got a driver's license.
yeah, so do all the illegals. We all
But
know
all
that.
the illegals, man.
You know how bad I am? I did not even get an enhanced license.
Dude,
But,
what is wrong with you? Get some
You mean
freaking proper paperwork, man.
You mean the real ID? Is that what you're talking about?
Yeah, I didn't even bother getting one.
Come on, man.
I'm
guy,
serious. Why am I
man.
going to waste my time walking to DMV?
You're not
This
wrong.
guy, what is wrong with you? You're doing so well in life. Doesn't the missus ever get on your case, be like, hey, let's go somewhere outside of the New York metro area?
She probably loves it more than Steven.
No.
Like, you don't want to like just go like to like Spain and go check out random shit? Like,
Hell no.
what are you gonna do?
I want to
Stay in
go.
the
I want to
metro
go to
area
China.
your
That's
entire
where I
life?
want to go.
Dude.
You want to go to China?
No.
I want to see what that propaganda is all about.
Yeah, I want to go too. The
I'm
only
gonna get
problem
locked
is,
up, but I'm gonna have fun doing it.
I think Amit was saying he can't go because he's probably on some kind of like flag list because he's said some not so nice things about China.
The truth, but I got to run to the Rocket Lab Weekly, but it was good catching up with you guys.
All
right, enjoy
Well,
yourself,
Be
thanks,
sure.
guys.
Yeah, let me put Hot Steve's YouTube in the chat so you guys can give him a good
Oh, this was
follow
great.
and,
I think we should try to make Saturdays a thing with the three of us. I'm trying to go live every Saturday and Sunday during the day. So I will try to talk Matt and Kris into doing something.
I'll
the
do it,
weekend.
but you got to get a passport. That's my condition. I'll help you. I don't mind. I'll be on there with you, but go get yourself a damn passport.
I'll go get a passport. Don't worry. I'll walk.
We need to do like a GoFundMe.
I'll show you a passport. I'll show
All right,
you.
I'll see you.
Thank you everybody for joining. Really appreciate it. I will be live.
I had no idea I was in a podcast and illegal for the last 2 years.
I will be live at 9:30 tonight to dismantle the AI bubble bear case. I'm coming at them hard tonight.
No wonder you didn't comment for the last 2 years on deportations because you worried you're going to get deported. That's what it is.
We're going to have some fun tonight.
All right. Have fun, guys.
Good luck at poker tonight, Kris.
Thank you. Take care. Bye.
Later. So everybody, please follow Kris. Please follow Matt. Thank you everybody for joining. June, Shells, Austin, Michelle, thank you for joining. Really appreciate it. I will see everybody tonight at 9:30. Talk to everybody soon. Have a great rest of the afternoon.
Get your ass out of the metro area, New York metro area. Go see the world.